of Owakim Adenusi. Before I introduce Owakim Adenusi, I would like to share a few house rules if you are joining us, to everyone joining us. First is to say thank you for joining us. The second rule is we want to implore you that you should endeavor to mute your mic. During the question and answer session, when we get to that part, you'll be allowed to unmute yourself or just use the chat room to ask your questions. Use the chat room to ask your questions. All right. So and of course, during the course of the program, we'll be taking breaks so that you'll be able to take some stretch, take a bit of walk that would relax your nerve a bit. So just to say, welcome again to today's event. Please allow me to welcome the convener and the host of today's event in person of Owakim Adenusi. Owakim Adenusi is the founding partner, MD CEO of Conrad Clark, Nigeria. Please welcome Owakim Adenusi. Your mic is mute.
Morning, everyone. Can you all hear me? It's good to meet you all. And we're still in just coming out of COVID, post-COVID now. And I'm so excited about this particular summit because for a long time, we've been thinking about creating value, adding value to the insurance industry. But why is this very, very important to us? So I'd like to welcome all our delegates, our speakers, and my colleagues to this edition of Risk and Insurance Summit. It's fully packed with a lot of exciting nuggets, tools, and tips that will help us. The essence, according to Thomson Reuters, the greatest compliance challenge facing a lot of financial services, especially the board, or that they will face in 2020 going forward, ranging from budget and the cost of implementation, increasing cost of compliance. The cost of compliance is getting more and more increasing for a lot of financial service organizations, and it's affecting their P&L. It's affecting the profitability. Sometimes we spend time trying to do a lot of compliance initiative, and then we're wondering what are the benefits. We hope that this summit will help us to locate the threats and the opportunities. Also going forward, some practical tools to implementing this particular issue. But most importantly, is to be able to help us to look at the balance, the cost versus benefit, the profitability, and how we can take advantage of what these new requirements will do. Also, it will have a cultural impact on the business as well. How is that going to be important for all the people, all the staff, stakeholders that will be joining this? At Conrad Clark, of course, our passion is making sure that you succeed by minimizing threats. I know within the insurance industry, we use the word risk from the point of insurance coverage, but when we talk about risk care, we're referring to threats and opportunities that will affect the essence which your investors, the shareholders, and those who are looking for return on capital, which the things that will either enhance or destroy those things. That's what we're passionate at Conrad Clark. We're fully aware of all the efforts required to comply with these reporting standards. We're aware of the fact that a lot of you are doing a lot of things, but we're equally concerned that we need to be able to support you, bring this thought leadership in, add value to the industry so that we can quickly identify the unplanned negative exposures and also quickly begin to address or take advantage of opportunities that this particular IFRS give us. The plan is to untangle some of the difficulties most of the insurance industry will be facing, could potentially face in the process of implementation. This summit attracts insurance professionals at all levels and has been put together for learning as well as sharing practical experience. So we hope at the end of this summit that we will have added value to every organization. We have here colleagues from different backgrounds, and thank you for all our partners, colleagues who will be bringing modern thought leadership in, and you're going to be hearing from them. I really want to encourage us to engage. I'll be really active with this because I'm passionate about the industry. It hurts me when I see another insurance company going down or something's happening to a known name, a known brand. It's one passion I have, just not to see company collapsing or just going to extinction. So, ladies and gentlemen, colleagues, welcome, and all our guest speakers, the chair, sponsors, partners, welcome. Thank you for believing in us. Thank you for always supporting us. Thank you for continuously working with us. Today, we will not let you down, and we hope it's going to be very, very engaging, steamy, hot, exciting, inspirational. Most importantly, we're going to go with something tangible that will be able to, that will help us to deliver profit to our stakeholders. Thank you very much, and welcome. Please, let's enjoy the session. Femi, over to you. Thank you.
Thank you so much, Oga Risk. Welcome, Adenusi, for your introduction. I'd like to, again, say welcome to everyone. I believe we all have a copy of today's agenda. It's been emailed to everyone. So right now, we'll be going to the opening speech. But before then, I want to take a moment to welcome our speakers into today's conference. More importantly, I'd like to welcome the summit chair for today's event in person of Mr. Lawrence Nazare, who is the Group MD of Continental Reinsurance, also the co-chair, Mrs. Yetunde Lori, the Director General of the Nigeria Insurance Association. Also today, we have Hamad Khan, the Chief Financial Officer of Oman Insurance, UAE. We have Mark Miller, who is the IFRS Global Lead and Head of Client Advisory, Legerity Financials UK. Also today we have Oyinlade Olalekan, the MD of Old Mutual General Insurance, Nigeria Limited. We also have today Yvonne Palm, who is the Chief Risk Officer for African Reinsurance. Thatu Halov, the Risk and Actuarial of Continental Reinsurance, is also speaking today. Unjum Uma Onyemenam, the Chief Financial Officer of Insia Insurance Limited, is on this call today. Rashidat Adebisi, the Chief Client Officer of AXA Mansard, is also on this call. We want to appreciate Oscar Kitasoboka, the Chief Actuary of the Central Bank of the United Arab Emirates, is also on this call. And of course, Oakim Adenusi, the MD CEO of Conrad Clark. We want to say welcome to all the speakers. We want to say thank you to all of them for joining in. If you have your program with you, we'll be going straight into the opening remark. And for that opening remark, I'll be welcoming the MD, the Group MD CEO of Continental Reinsurance for his speech. But before then, I'd like to read out his profile. Mr. Lawrence Nazare is the Group MD of Continental Reinsurance. He has over 30 years experience in the reinsurance industry, starting with the Zimbabwe Reinsurance Corporation from 1990 and proceeding to Intermarket Reinsurance, where he was the managing director until 2010. He joined Continental Reinsurance PLC as the Group Executive Director and Chief Operating Officer in 2010. He has held key positions in the insurance industry, including being the chairman of the Organization of Eastern and Southern Africa Reinsurance from 2012 to 2015, the chairman of Zimbabwe Association of Reinsurance Offices 2001 to 2012. He's held so many positions in the reinsurance space. He's a qualified legal practitioner and also an associate of the Insurance Institute of South Africa, and an associate in reinsurance of the American Institute of Property and Casualty Underwriters. Ladies and gentlemen, please make welcome the chairman of today's event, Mr. Lawrence Nazare, the Group MD, Continental Reinsurance.
No, it doesn't matter. It can be.
Okay, thank you, Amy. and thank you, Joachim, for having me here. Am I on?
Yes, you are. Yes, you are.
Okay, thank you very much. I think, ladies and gentlemen, change is always received with skepticism and misgivings. Over the last few years, IFRS 17 has been one such development, eliciting debate and dividing opinions across the board in the insurance and reinsurance space, probably more than any other subject. There are concerns around complexity, concerns around resource constraints, concerns around costs, and even concerns around a perceived lack of benefits. There is also now, I think, as we speak, a growing mood of consternation and fear about implementation deadlines, even though there have been a series of deferments. Ladies and gentlemen, good morning. I'm Lawrence Nazari, and as been mentioned, I'm Chief Executive Officer of Continental Re. We are proud partners and long-time friends of Joachim and his team at Conrad Clark. We've collaborated over a number of years in initiatives to raise the standards of risk management, not only in Nigeria, but together we've been consistent advocates for the adoption of better reporting and compliance standards across the continent. Today, Conrad Clark and their partners have, I believe, put together a program that will not only unpack some of the intricacies of IFRS 17, but also focus our minds on implementation methodologies, the challenges, and hopefully the good aspects that are enshrined in it for insurers and stakeholders. As you have been, you've seen, I think we do have a fairly exciting program, and I believe by the end of it all, we would have covered quite a bit of ground in terms of getting us to appreciate what IFRS 17 is all about. My brief preliminary remarks really do focus on some of the benefits of IFRS 17, and I know there's been a lot of skepticism around this. So I felt that maybe I should focus on that before the experts, go into the technical conversations around the subjects. Number one, I believe that the fact that IFRS 17 will ensure that liabilities are valued at market value is a major positive factor. By bringing the valuation of insurance contracts in line with both the assets that back them and valuations made in other industries, IFRS 17 will initiate a better understanding, thereby leading to better product design and also greater transparency in the design of in the insurance products so designed. Number two, IFRS 17 will ensure a truer reflection of profits. I think this has been a major issue in terms of the various formats of insurance reporting that we have seen. Insurance reporting is a complex subject. Currently in some jurisdictions, insurers have designed products to maximize, taking of profits quite early. IFRS 17, by contrast, measures profit in line with the services performed and will appropriately spread this over the contract's life in a series of smaller cash flows, giving more accurate insight into how profit emerges for insurance contracts. Number three, IFRS guarantees consistency across the globe. A consistent and high quality accounting standards is really good for all of us, particularly entities like ourselves that are operating across jurisdictions, or entities like us that must compare numbers from across multiple jurisdictions. It will definitely reduce the long-term cost of compliance. We are sometimes compelled to adopt various accounting standards in different jurisdictions, and it would also make it easier for particularly other partners outside our sector to compare numbers. It is bad enough and difficult enough for us to compare our own numbers because of lack of consistency currently. And then IFRS 17 will also ensure collaboration within our teams, collaboration between actuaries and accountants. The two functions of accounting and actuarial have hitherto been quite siloed in our businesses, but IFRS 17, will make it easier for them to work together, to understand each other, establish better rapport, better mutual respect and cooperation, which is good for all stakeholders because it does ultimately lead to the better management of our finances and risks. And number 5, I believe IFRS 17 will lead to better governance of actuarial systems. Insurers and reinsurers have been raising over the last few years, I think it's probably a period of more than 10 years now, their governance game. And we have all reaped tremendous benefits, particularly in terms of reduced operational risks and also lower management costs and generally better insights into the profitability of our business. I believe that the further improvement of governance standards that we will derive from IFRS 17 will not only help us achieve compliance, but also lead to further reduction in costs. And the automation that comes with this standard will minimize manual operations, thereby improving our insight into risk. Another benefit is that there will definitely be greater protection of policyholders. As we all would know, IFRS 17 is going to lead to a significant strengthening of insurance company balance sheets. This is good news, not only for regulators, it's good for ourselves because we are able to provide a better product, but it also results in really much more protection to our policy holders. And finally, there is the issue of investor confidence. I think the lack of transparency in our reporting has been a major factor in conversations we have had with investors who would want to come into the insurance sector. And as all of us know, there is a dire need to attract investment into the insurance sector, particularly in Africa, if we are to grow the sector and attract more business, lead to higher insurance penetration. Improvements in accounting standards will give investors proper insights into our financial performances and also give them a much better understanding of our businesses. This will obviously heighten confidence and will make the sector a much more attractive proposition for the investor community. Ladies and gentlemen, the reality is that IFRS 17 will be coming into force soon. It has been embraced by the majority of insurance jurisdictions across the globe, and it is really best for us to seize the opportunity for change, participate in it, and embrace the benefits. I hope the really stellar presentation, team of presenters, the stellar team of experts that Joachim and his team have put together for this summit will lead to better insights on IFRS 17 and hopefully assist all of us in mapping the way forward to ensure that there is seamless adoption across the board. Thank you very much, ladies and gentlemen.
Thank you so much, MD CEO, Continental Reinsurance. Thank you for the warm welcome remark. That was a 10 minutes well spent. Thank you for the welcome remark. Ladies and gentlemen, would move on to the next item on our agenda. And the next item on our agenda, we'll move into the technical presentation. The first technical presentation, which will look at practical insights, opportunities, challenges, and lessons learned in IFRS 17 implementation journey. So Hamad Khan is going to share practical insights of what his experience was like during the implementation journey. He's the Chief Financial Officer of Oman Insurance. And because he's had this practical experience, is going to share with us some of those experiences he's had. I would read his profile in a moment, and then you'd be able to come up for his presentation. Hamad Khan is the Chief Financial Officer of Oman Insurance Company, United Arab Emirates. He has over 2 decades of experience, including over 20 years in a leadership role in the insurance industry. He has been a founding team member of various startups, both conventional insurance and Takaful company in GCC, including setting up of a joint venture. Some of his key accomplishments involved in various business areas include transformation, IFRS implementation, process reengineering, data analytics, M&A related projects, and development of company-wide policies, including integrated cash management solutions to enhance overall customer experience. He's worked with several institutions, Allianz, EFU, Abdul Latif Jamil, KSA, America International Group, UAE, and Abu Dhabi National Insurance Company. Ladies and gentlemen, please welcome with me Hamad Khan for his session. Hamad, could you please unmute your mic?
Yeah, thank you so much, Femi. Good morning, everyone from the continent of Africa, and if you have some participants from this part of the world, good afternoon. I will be sharing the slide. Please do confirm to me if you're able to view it.
Yes, we are able to.
Great. Thank you so much. Look, first of all, I really would like to thank Conrad Clark for allowing me to speak at such an important event. Let me say by starting, I'm completely impressed by having such a conference with people getting involved, from different fraternity of business, starting from insurance companies, reinsurance companies. You have speakers from the regulation point of view, and you also have brought participants from different continents. And I think that's a great achievement. And I have really, to be honest, not seen similar, events here locally in GCC. Let me first of all, take you through a little bit of my experience. I'm not going to bore you, to be honest with you, with the intricacies of the CSM and the GSM and the PE and those kind of things, because I think that probably you would be listening from every consultant day in, day out. I think what I would really try to give you is more of practical insights, more of the lessons learned, what has been our journey, which we're still going on at the moment, and what have been some key successes and key failures, and how we have, again, picked up from those and how we are moving in that direction. Let me first start with you a small kind of a joke of accounting standard. Whenever a new accounting standard comes in, it just brings a new level of draft with so many confusions, so many ambiguities. And as you can see, this a bit of a cartoon, does it say, can you do another draft of this? There is still some couple of sentences that people might understand. And I think what I'm trying to say here, that whenever a new accounting standard comes in, it brings a lot of Q&A, a lot of issues, a lot of concerns. And then as time goes by, the understanding gets developed. And this is where I'm really trying to focus is each one of you probably would have already been embarked into IFRS 17 project. Some of them probably you may are in the mode of starting up the project. Don't get concerned. No one is an expert in this market. You will walk on the bridge and build the bridge at the same time. And I think that is an important message that I want to give you is don't expect yourself to be the expert. You will learn with time and you will do mistakes. And then again, we will get up and then again, correct them and move on. So it's a journey. The only thing is we just need to be positive and we need to move on. Now, let me give a little bit of brief, the impact that it will give to your business. A very big brief it has a 360 dimensional impact, starting how you want to distribute your business, what are the market segment that you want to go in, to your ALM, to investments, the product development, how you're going to measure your performances. Well, then the core comes into your systems, infrastructure, and then more importantly is how you're going to educate yourself, your senior management, your shareholders, and the readers of the financial statements. So it's a 360 degrees change in the approach that we are really would be going in 2023. But then I just probably want to give a little bit of key concepts, and I don't want to waste your time and bore your time, but I think what I'm really trying to say here is these are the key components of IFRS 17. And as we say that it may be very easy, but when you go down to these level of details, you would find that it's so important to look at them very carefully, because whatever the decision that you're going to make around them has an impact for a much longer term. And henceforth, when we looked at the level of aggregation grouping, for instance, we realized that it was, it's easy. But then when we went into a lot of details, we realized, no, that's not the case. I'm not going to take much of your time, but I will tell you that for every these elements, and there are a lot of other elements that you will probably have to prepare the policy paper, please give time, because any misunderstanding or not understanding it properly have a trivial impact once you implement IFRS 17. Now, some thoughts. Those guys who have not really gone into this IFRS 17 journey, please do it now. Whatever the implementation you have built for yourself in terms of timelines, please keep leeway for potential setbacks. You will have setbacks. You can't avoid it. It's something, as I've said, you're on the bridge and you're learning with process. The most important thing that you have to really decide at what is the ambition that you have. And it all depends on the infrastructure that you have available. Are you looking at a minimal compliance? Are you just doing for the sake of IFRS 7 implementation or to keep your regulators happy? Do you want a smart reporting, or do you really want to transform your organization? And that ambition will actually lead you the level of implementation that you want to get into. The other element that I would really focus is people. You have to make sure that you have the right level of team. Like in Oman Insurance, we have a working committee where we have people from finance department, actuarial department, project management. You have people from the underwriting departments, compliance, and the team together is working to ensure there's an adequate governance. But what is more important, that you need to start appointing champions in each and every stakeholder department, because you cannot go to each every employee. Like I have an employee of 500 people. There's no way that I can pass the message. So you need to appoint champions when in individual stakeholders, so that information and the knowledge goes down below the level that you really want to. Another thing that I really would like to advise you, please work hand in hand with consultants. But end of the day, you guys are going to drive the project. And that is very essential and key. As I've said, the timelines will be very uncertain. This is probably 7th and 8th time that we have changed the timelines. Every month, there is something that happens, something is beyond our understanding. You have quarterly reporting, you have monthly reportings, you have holidays. You were supposed to finish at those times, doesn't happen. And henceforth, whatever you say, the timelines will be uncertain. So you have to make sure that you have enough time for yourself. The other important element that when I took you to that slide, and I'm again referring to you, policy papers are going to be extremely essential for you, because that will really decide how you want to look at your liabilities and your assets. Don't forget the asset part, please. And this is what I'm really humbly suggesting to you. We are probably focusing a lot on the liabilities, but don't lose the focus on the assets, because you have to look at and make a conscious decision if there is any volatility or mismatch of your assets and liabilities. And henceforth, I'm not too sure in the continent of Africa, but in some companies, we have early adopted IFRS 9. I don't know if some companies are still following IFRS 39. Maybe that is an opportunity for you to align yourself. But for us, we had already pre-implemented IFRS 9. So for us, it's a challenge that we already have the principle of investments. And now we have to look at what is a mismatch. So I think that's one element that you have to look. Please also don't forget the IFRS 9. A very important element is the impairment on receivables. And those who have not implemented IFRS 9, they were not required to, but now you will have to calculate the expected credit loss for receivables impairment, which, trust me, will give each one of you an element of surprise. And I only would like to caution you is please do not take this lightly. Companies, those who have not adopted this, will get one-off impact. And that, of course, that impact will be through equity, but it can have an impact. And this will now drive of how you really manage your credit risk. So, and I think now people have to seriously think how they want to manage their credit, how they would like to manage their collections, and those elements will be extremely key once you implement IFRS 17. I would then again, very importantly, look at system and solution. As I've said, what is the level of ambition that you want? And I think that's something that you need to think very clearly as how the solution system that you want to adopt. And henceforth, that's something that you want to look at. There is going to be huge, more granular expense allocation. What do you want to do that? Do you do it as of now? If you don't, does your current accounting systems have the ability to allocate your expenses to quite a detailed level by products? How would you do that? Then the big question there is always right now, and again, I would very humbly tell to the people who are listening to me from the actuarial and finance fraternity, there is always, you will have people who say you need an actuarial system. Some will say, no, it's an IFRS 17. You need an accounting system to support the cost. And I personally feel it's a combo of the two. And henceforth, if you want to take an overlay solution, you have to think through very carefully that the accounting solution that you want to buy, or the actual solution, because you now need to work on the cash flow basis, what system will really support. And remember, you have to run IFRS 4 in parallel, which is again a big challenge. So you have to look at maybe two systems in parallel that can generate two set of results in IFRS 4 and 17. And those are not easy once you really start working into quite a details. Other element that I probably see is there is going to be a lot of scrutiny by shareholders. And I think Mr. Lawrence mentioned, now you have to identify honest contracts. You will be forced to discontinue unprofitable products. There is going to be a lot of focus on technical pricing, and you have to take bold decisions. You have to seriously think about your RI arrangements. Are these RI arrangements just for the profit transfer, or really you really need it to manage volatility? Another big element is the change of your key performance indicators. It's not going to be the same what you've been seeing now. The two very important element I would speak, as you can see, is please involve external auditors. And I'll tell you the reason why. The reason why I'm saying is, let's say you decide on a policy, and by the time you reach 2023, and at that point of time, when you have already implemented your systems and you want to go live, your external auditors will say, hey, hang on, I don't agree with your policy. What would you do then? So it's very important that when you're in the journey, you have to involve the external auditors now, agree the policy now and decide. But then I'm giving another spin. You may have a 3 years rotation. So by 2023, you may change your auditors and they may have a completely different view with the view that the existing auditors has. So again, that's something that I really would like you to please look into it. More importantly, I would say is it has been extremely great success for us in United Arab Emirates, where the Insurance Authority, or now the Central Bank of UAE, have been extremely supportive of the journey. We have set up technical committees with the regulators. And I believe that Oscar was one of the participants. I think it's been a great success story. What we have really done is we have brought everyone into the room, including regulators, the auditors, the actuaries, and the insurance, and trying to carve out some common understanding. And I still believe it is going to be extremely important, though IFRS 17 is principle based, but yet, as we say, it brings transparency. But at the same time, I may have a different policy for discount rate. Another company may have a different policy for discount rate. So there has to be some common grounds that may have to be agreed, though it is still principle based. And I think role of, I would say, of the regulatory bodies is extremely essential. I'm not going to waste my time here and your time in again explaining, but I think please remember one other element, that when you buy any system, make sure that those system does have the ability of planning, forecasting, budgeting. Because remember, you are not in the IFRS 4 anymore. So any system that you're going to look at that provides you the cash flow should have the ability to generate or assist you in building up the forecast, budgets, plans versus the past, versus the prior, because that you cannot do what you are doing as of today. Last but not least, data, data, and data. Let me start you even now. As I speak, any insurance company in the world do have problem and challenges with the data, even for IFRS 4. Some companies does that on Excel. Some companies might be using company systems as Alteryx. Some companies like me, I am using 8-9 core systems. I have multiple systems that I run for different lines of businesses. There's a significant time that is used to process and reconcile this data. And I'm saying as of today, there is a lack of integration of data. Closing and timeline, there's a lot of process that you guys even do manually in IFRS world. Now imagine you moving to IFRS 17, which is more data hungry, which is going to ask you probably much more information that is required today. How are you going to manage it? So that's the big question that we all have, because now technically your financial is going to be more on cash flows based. So keep that in mind and have that thing in your consideration, even when you're buying a system. And that's extremely important. And henceforth, this is a very key slide that probably what you're seeing is a journey from your data to the financials, including disclosure statement. And I'm coming to this on the left side, the second box where it says manage data gaps. This is going to be extremely crucial, because you cannot change your core system to the great level. I am running a business of over the $1 billion, and I have 4 or 5 systems. To change all the systems to ensure that I have the data available will be extremely challenging, and I won't be able to do that. So what I need to do, I need to buy some system who could manage my data gaps and can be an overlay to a process. Now, this is not something a surprise. Even European companies are challenging, have a challenge. And that's why when you see a lot of systems who are offering, they do offer this solution. Whether some companies use, say, data massaging, data manipulation, data management, whatever it is. But please keep that important element of consideration, because if you don't have it, the transformation data, the aggregation, actual analysis, cash flows, risk calculation, discounting, CSM, measurement, then accounting entries, trial balance, report, and reconciliation is only dependent on the data that you give as an input. And henceforth, this is something that I thought it gives you a good journey from data to the financial statements. Another element I would really like to focus is on the KPIs. The KPIs are going to change. I think the industry is still struggling. What would the KPI? People say, would it be ROE? Would it be ROE adjusted CSM? What am I going to do with the combined ratio? Can I keep the combined ratio? What would be my expense ratio? So I think the market is still, I would say, don't get worried. Don't sleep over it. I think with time, the market will itself come up with KPIs. But yes, you need to start thinking of them. And I've shared one fine example of how the big change in KPIs would develop. Now, for example, if you all would know that when you look at RI commission and RI profit commissions, in IFRS 4 world, when you look at your financials, it actually gets adjusted with your net commissions or commission expenses, right? In IFRS 17 world, it will be netted off with RI premiums. Likewise, your RI profit commissions, it used to get offset with commission expenses. Whereas the anticipation is the RI profit commissions will be added as a recovery, just like how you show as a claim recoveries. This would mean it will change the behavior of my ratios. It would mean that the way I look at my expenses or my net commissions will change. It would also mean that there will be changes in my NPE, which actually calculates the loss ratios. Then, and there's a very good document which I've shared you some of the sample of how AM Best actually looked at it when calculating the claim ratio or a combined ratio, an expense ratio on IFRS 17 world and IFRS 4 world, and saw the impact how the companies would do that. And it also would depend on the reinsurance arrangements you have, because the higher likelihood that you will have a higher RI purchase, it will have more significant commissions. Hence, it will have more significant volatility on your KPIs. So this is just one fine example that I'm trying to share with you how the regime in the claims ratio, expense ratio will be looked at. And specifically, I'm just giving these 2 small examples. How the change of shift of these will move from one line to another line, and that really can change the dynamics of your ratios. Likewise, ROE. Now, if you look at ROE today, it's nothing but net profit divided by shareholders' equity. Your shareholders' equity could be the average equity of the average of 2 years. Whereas what we believe the IFRS 17 will change. It will be the IFRS 17 net profit. Those companies who will have CSM will have to unwind the CSM, tax it, and then rewind the CSM for the new years, and then deduct the amortization. So, and that would then be divided by shareholders' equity, because CSM there will be a movement of CSM, as you know, that's called unearned profit. So you will be earning over the years, but you will have to take the movement of that. And henceforth, you could see that there is some complexity even on calculating the return on ROE on IFRS 17 world. Let me again reemphasize all the point again. What I said is alignment of stakeholders will be very key. You will have to make sure that you guide, you train your board. Things are completely changing. It's we are struggling and we are learning with time. It's our responsibility collectively that we need to educate our board, because they are the ones that are going to monitor this. So it has taken a lot of time for us to understand this IFRS 17. Imagine how much time the board would take. The other important is, I would say, engagement with management will be extremely key. You have to make sure that it's going down in your to the level of bottom, including the trading sessions. The last slide I would speak is a survey was done by Willis Towers Watson and said, guys, you are in the IFRS 17 world. What are the major challenges you are facing? And I think that may really tell you the flavor what they feed. As per the Willis Towers Watson, they're saying 30% of the participants had a concern on data and IT requirements. 20% of them had a concern on resources and how they were trained. 10% of the view was they have lack of consistent opinion from the auditors and the interpretation of standards. 5% had a concern on budget, on the timeline. 3% had a concern on the budget, and hardly probably 2% had a concern on the COVID and the impact that has given in the implementation of this. But end of the day, it also brings opportunities, because now the companies are going to focus on bottom line. You cannot do cross subsidy. You cannot say, okay, my medical, for this client, I'm very profitable in medical, but you know what? I will take a loss-making property business. I think that's going to be a problem. You will have to look at the group of contracts. You have to make sure that it's profitable. And if you are actually, your group of contracts is onerous, you will have to declare it upfront. And that's not going to be easy for any management to do so and declare in the financial statements. So these things are going to be a game changer, but then it also brings some discipline, which is very required in the insurance industry. It will also allow you to do a little bit of BI capabilities, capital modeling, and I think that's something that we will learn over time. Look, end of the day, this confusion. You have two choices to make. One is you get concerned, and the second choice is enjoy. I think what I have taken the choice is I'm enjoying the confusion. And if you enjoy the confusion, I believe that you will enjoy the ride, enjoy the experience, enjoy the challenge, and let's move on with the aim that we will be able to implement on time. With that, thank you so much. Thank you for the patient listening, and all the best to all the speakers and the participants. I hope that I've been able to give some justice and being able to provide you some level of thoughts and insights. With that, thank you so much.
Indeed, thank you so much, Hamad Khan. There is, you said there are two things, you can that can happen with this confusion. Yeah, either worried about the confusion or you enjoy the confusion. All right, and I know that during Hamad Khan's technical paper presentation, there were lots of questions on your mind. All right, so please start putting your questions together. All right, Hamad Khan, that was a very beautiful presentation. Thank you for that presentation. Please start putting your questions together. If you can use the chat room, please use the chat room, put in your questions there. Later on, when we get to the Q&A session, Joaquim Adenusi, who is going to moderate that part, would ask you to take your questions, and Hamad Khan is still here to answer your questions. I believe Hamad Khan already did a thorough job on that topic. But while he was speaking, he talked about the research that WTW did, and one of their findings revealed that 30% of the respondents were concerned about data and IT infrastructure. Okay, and of course, during his presentation, he also talked about one of the challenges they perhaps encountered, speaking about data and use of technology. And in that light, we'll be going to another presentation. All right, but this time around, this presentation will look into using technology to minimizing the IFRS 17 project risk. And so it's going to be a case study using global perspective. And on this call to take us on that will be Mark Miller. Mark Miller, I would read his profile in a moment. Mark Miller is the IFRS global lead for Legerity Financial, and also the head of client advisory. Mark Miller is a qualified accountant, ACCA, with over 20 years of experience of finance change programs. Mark initially trained with PwC in the insurance practice, and he has been involved in multiple accounting and IFRS implementation, and is the global lead for IFRS 9, IFRS 15, IFRS 16, IFRS 17 program with Legerity Financials. Ladies and gentlemen, please make welcome Mark Miller.
Yeah, good day, everyone. Thank you very much for allowing me to speak today. It's a great pleasure from London to be talking to all of you participants in Africa. It's just a shame we can't travel, but hopefully that will change soon. So let me share my screen. I will share my screen, and hopefully you can see my slides. So thanks for the introduction. I'm going to talk to you today about how we can use technology to minimize IFRS 17 project risks. So I think you've been introduced to me, and that was very kind. Thanks for the introduction. So let me first talk about the project risks. And I think the previous speaker did an excellent job on outlining a lot of the risks around IFRS 17, and really the top one, as the Willis Towers Watson survey showed, and our surveys have shown the same, is data. So I'm going to go into data in a bit in the next slides, but let's have a think about other things that can affect the project. So this is, making sure we get to the end and can comply with the standard in 2023. So the timeline is now getting challenging because the standard sort of came out in 2017, and we really started working with the industry in 2018. We were doing a lot of proof of concepts. Now we're in 2022, so the timeline really is getting tight. So definitely that is a key factor now, and around that, resources is a big problem. So particularly, I suppose, some of the smaller companies, you only have one or two experts in accounting or data experts. So limited resources within the firms is a major issue that we see across the project. So often these key people are on the critical path. So how to utilize their time and make sure that insight that those kind of people can give to the project is very key in the way that you run it. And around that, we also see that IFRS 17 is very complex, and a lot of people have busy day-to-day jobs and probably haven't had the time, like the luxury of myself and a lot of the consultancy firms, to really understand IFRS 17. So in terms of getting the right insights from the team and getting the people to work on the project effectively, having a really clear understanding of IFRS 17 is really, really important. On the other end of the company, the senior management, we need their spot in the project to make it work. There are often, as the previous speaker was saying, a lot of hurdles come up. Things change regularly. The timeline, the budget requirements can change as unexpected things come up. Unless you've got good sponsorship, then these things are are harder to get through quickly. So sponsorship of the project and engagement from a senior audience in the project is really important. Something that's maybe a little bit overlooked is transition. So we often start projects, and it's obviously very important to work out the design, etc. But transition is something to think about early on. So what you don't want to do is have the design of your solution all in place and not really thought through how you're going to do the transition. So how you're going to create your opening balances, how far you're going to go back, what kind of transition methodology should you employ, and importantly, have you agreed that with all the relevant stakeholders, and of course have an idea in terms of your preparation of what your numbers might look like when you get to transition. Because obviously, once you've done all the project work and you've got your figures, if your stakeholders aren't happy, it's a bit late to be going backwards. So really drilling into transition, I think, is really important. And around that, the scope of the project. So with the timeline as tight as it is, probably complying with the standard is by far and away the biggest priority. Some of the earlier adopters of IFRS 17 were able to bake in significant transformational projects, so transforming the finance landscape. But between those two extremes, there are a number of different goals and objectives. And so, for example, things like allocations of expenses or delving into forecasting and budgeting, these are all great things to be targeting, but you need to have a clear idea of what the scope of your project is going to be to make sure you can deliver on time. So scope creep can be a big project, a big risk. And then, we're going to talk about data in a minute, but the integration effort is important also. So how are you going to assemble the data? What kind of technology are you going to use? What kind of file formats? So from an IT perspective, it's really important that the integration effort is fully understood as part of the project. Because having the data, having the solution is all fine, but unless you can have that process to integrate the data into that application, and that is, and you make that as efficient as possible, that can become a big risk in the project if that's not working. And the last thing I just want to mention in terms of project risks is operations. So getting a number, CSM, getting the IFRS 17 results is perhaps only one aspect, because you've got to think, once I've gone live, how am I going to operate my solution? So that means operations from an IT perspective. Who's going to do it? You're going to do it internally or software as a service. And then what aspects are involved in that operation? So what kind of tasks are involved, how that interacts with the data, and how that interacts with the people who are going to review and understand the numbers and potentially require adjustments and all those sorts of things that go with the month end. So it's important as part of the project to think up front about the operations of the system, because again, you cannot leave that to the end, because you'll think you're getting towards the end of your project and then you'll realize you have a lot of work to do around operations. So we talked about data being a key challenge. So I just want to drill into that topic in a bit more detail, because I think some of the points were mentioned by the previous speaker, but just to it's such an important topic to pull out a few more. So one thing is the level of aggregation, and that's a key aspect of IFRS 17 that's new, in that you have to have the unit of account, grouping into portfolios, and so all these levels are things that previously probably data wasn't stored or managed in, particularly data in the GL, like expenses or maybe acquisition costs coming from the channels or even your actuarial model. So level of aggregation is key. And although you may think you have the data, testing that it can be provided at the right level of detail is something that, if you don't think about in advance, can be a key problem. Related to that, there's a dimension of data which, I struggle to find a clear word. We've come up with the word periods, and what we mean by that is it, over what period of time are you aggregating and storing your data? And we see different parts of the business potentially handling data in different ways. So, for example, some operational systems would work on a periodic basis, so perhaps storing data, say premiums paid for a month or something like that. Whereas finance quite often work on a year-to-date basis. So finance would often have year-to-date data. And then maybe your actuarial modeling would have a view, more of a life-to-date view of the data. And so you can have life-to-date movements or potentially balances around reserves and things like that. So although data is available, the periods over which that data relates to can vary on the data sources, and your solution needs to take that into account. Another challenge with data is, although it's potentially available, the timing of it and the quality and completeness of it can be not sufficient. So you may need to bake in additional work to fix problems that previously in IFRS 4 weren't manifest. So with trying to build IFRS 17, it's very complex. You can't afford to create an inefficient process. So making sure data can be delivered in a timely way and of the relevant quality is a big challenge. And around that, you can see insurers with a lot of manual transformations currently sitting in their processes, often involving end user computing. So, when you look at top down as a key sponsor or stakeholder, you might see your finance team delivering good numbers, but around that there could be a lot of manual, inefficient spreadsheet type work to do that. And again, with IFRS 17, we want to try and eliminate that as much as possible. And then thinking about, most insurers would have reinsurance arrangements, particularly in the general insurance space. I would say perhaps the modeling and accounting for reinsurance is something perhaps not as mature as it could be. With data being derived effectively from the account for reinsurance separately, and that was, we talked about the KPIs. The last speaker mentioned that clearly, that's a key difference with IFRS 17, that reinsurance is accounted for separately. So looking at how you get the reinsurance data and disconnecting that in a way in terms of process from the underlying is important. And then the last point is just around your actuarial data. So actuarial data is key to IFRS 17, the cash flows, the risk adjustment. These are all key inputs to your IFRS 17 numbers. And you may have good actuarial solutions. You may have mature, efficient models, but what we often see is the steps, the analysis of movement that those models are able to produce isn't sufficient to deliver the IFRS 17 requirements. So don't underestimate, from a data perspective, the need to look into and potentially upgrade or change your actuarial processes. So with that in mind, what are the solution options for IFRS 17? Well, I think some insurers, and particularly in the general space and early on, were thinking, actually, we can do this with spreadsheets, particularly, when you start looking at consultants providing eligibility models or maybe your own impact analysis work. It's fairly, I suppose, tempting to see that those spreadsheets that you're using for those tasks can deliver you some form of IFRS 17 numbers. But let's not be under any illusion that is not a good way to go. They lack control, they lack the auditability, they can be error prone, they're not scalable. Whenever you change the business or ask a new question, want to see things in different ways, spreadsheets just don't work. And certainly a lot of lessons were learned in Solvency II with solutions, maybe incorporating spreadsheets or more point-based solutions, just don't cut the mustard. So they'll get you to day one, but then you'll have a big problem on your hands. So, as I said, spreadsheets can appear to provide you an answer, but they're definitely not scalable and far too inefficient as a long-term solution. Another option is potentially building your own, and we saw that quite a lot with some of the really big insurers early on in the IFRS 17 journey. But it's very costly to do that. It's quite high risk. It is going to take up a lot of time and specialist resource, and diverts you away from other priorities. Many of the aspects of IFRS 17 are well covered by specialist vendors now. So you're kind of reinventing the wheel by doing that. And to be honest, what we're seeing is a number of vendors who've gone down the build route, or groups who've gone down the build route. We're seeing, entities saying, "Well, hang on, this project's not going to deliver on time. It's not suitable. It can't handle, say, some complexities around reinsurance, things like that." So, we are seeing some build projects come to the market, perhaps looking for off-the-shelf solutions now, and certainly with the timeline, perhaps that's not a wise option. So really, what I'm saying is, I think buying a specialist solution is probably going to be the best option. So something that's available today, you can fix your budget, it's off the shelf, and you're going to have ongoing support around the application. And I think software as a service, SaaS, that means software as a service solution for IFRS 17 is really important, because that gives you the scalability. So your business hopefully is going to grow, and so you want something that can grow with your business. Budget is going to be important for everyone, both on the implementation and then later in the ongoing costs. So knowing what you're going to get and being able to pay for just what you use when you use it, having a predictable cost, this is something that can be delivered through software as a service. And then something that's flexible, because not every insurance company is the same. So you need to pick the functionalities that you need and nothing more. And that means you can keep the scope down and keep the costs and the effort and resources down as you go through the project. So I work for Legerity. We have a system called FastPost, and we have experience across many countries covering all kinds of different insurers. And when I was talking to you about those project risks, if I think what is the biggest thing that helps mitigate those project risks, and from a technology perspective, it's because the solution is pre-configured for IFRS 17. So this is really important, because it takes away a lot of effort and risk from the insurance company. So our solution comes pre-configured with a chart of accounts that supports all the financial statements and the disclosures. So we've done all that work to analyze what's required.
Sorry, Mark. Sorry. I've been seeing the same slide ever since you started the presentation. I don't know if it's just me, this slide.
Okay, I'm sharing my screen. Can somebody else?
No, I can't see your screen.
For me, it's been on the project risk slide ever since you started. So
I'll stop sharing and share again. Can we see the slide now? Can you confirm to see the slide?
Yes. It's a different slide.
So that's FastPost simplifying IFRS 17.
Yeah.
Okay, I don't know what was happening there, but sorry about that. So hopefully we'll share the slides after the presentation anyway. So I was saying that FastPost is pre-configured for IFRS 17. So that's really important in terms of mitigating these project risks. So the solution comes with all the accounting rules, and as part of that discussion around the accounting rules, obviously we can provide a good training, if you like, to people in the organization to bring up that team understanding. And it also means that when we're dealing with resources, we have a very clear set of questions that we need to ask, so we can maximize the use of their time. We have all the calculations covering the measurement models, including the reinsurance. And with that, obviously, we're able to understand what the data requirements are. So having done that work around all the different measurement models, the solution can drive those data requirements very early on in the project, which gives the insurers a good chance to invest in the relevant time to fix it. And we have some of the more complex aspects of IFRS 17 already catered for onerous testing, policy grouping as an optional. So that can reduce the scope potentially for the insurer with many things already pre-designed in the application. And that can extend further into some of the actuarial processes. So things like discounting, allocations, these can be added on as additional options, which again reduces the investment and time that you need to make in your overall project. And then thinking about the operations at the end, the solution has all of those balances that support the financials with the full audit trail right the way back to the transactional and the reference data. So you have a ready-made process around which to build up your ongoing operations. And then in terms of the timeline, obviously we're proven projects. We've done with this many times, and this can significantly reduce the speed it takes to implement. And obviously it's a proven methodology that will give you a much more probability of success. And one of our accelerators is in fact to data in the system. It can be fired up on the cloud very quickly. So in terms of your stakeholders, they can see progress right. That's really important for sponsorship from the executive. And then, lastly, it's a platform that is beyond IFRS 17. It can do many things. So you want to avoid buying just an IFRS 17 compliant only solution. You want something that can do more, potentially IFRS 9, do your parallel runs in IFRS 4, and incorporate all the changes that might happen in IFRS 17 as they go forward. So a future-proof solution is important to minimize ongoing risks of the project once you've gone live. So who are we? Well, we're Legerity. We have our FastPost solution pre-configured for IFRS 17, but it's a platform. It's much bigger than IFRS 17. We cover all accounting standards, including US GAAP, LDTI, and we have clients live across the world using FastPost for a number of different applications, including non-IFRS 17 insurance-related use cases. And the key for our application is audit control and data lineage are in our DNA as a proven finance system. But we're very modern, and so our solution is future-proof and scalable. It's on the cloud. We offer software as a service, on-demand computing, and it's very rapid and non-disruptive in terms of the integration. So that really is important for the project. And I think the last point around us is that we're a new company. We've been going since 2014, but we actually have over 28 years of experience. We've done over 100 finance accounting change projects. So we're very experienced, and we have a small team, but we're able to deliver an A team for each one of our clients. And that can significantly help with the resource efforts because we can use our experience to train and target the use of internal resources best. And of course, we can obviously supplement the project with our internal SMEs as well. So I think we were recognized recently with an award from the ERM, which we were very pleased with. And I think this reflects our work of working across the industry, not just with life companies, but all kinds of different companies. And we also do a lot of educational work, and we like to support the insurance industry from a much bigger perspective than just selling software. So our goal is to have successful projects and be well respected across the industry. And I think that was reflected with this award. And we're seeing the benefits of that. We have a number of excellent projects that are nearing the end, but we're also continuously signing up new clients. And we have Swan just recently announced in Mauritius, we're starting a big project there. They cover life in general. And then we're about to start a new project in the Middle East with Baruch. And we'll be doing not just IFRS 17, but IFRS 9, which, as the previous speaker mentioned, is important not to forget. So in terms of those project risks, just to summarize again, the key point is you need something that's pre-configured. You need optionality to support exactly what you need, nothing more, nothing less. You need all that audibility and traceability to cover the operations. You need to work with an expert team, and importantly, something that's future-proof and something that will give you that best chance to solve the data challenge as early as possible in the project. And with that, I will pause, and I think we're going to move to Q&A. So thank you very much, and I look forward to your questions and interactions as we go through the conference.
Thank you so much, Mark Miller, for your beautiful presentation. Ladies and gentlemen, I hope we've been having value for time. We'll be moving to the next item on the agenda, which is question and answer. And leading that Q&A session is Joachim Adenusi. But before the Q&A session, I want to let you know that we have a gift for 2 persons on this call. We'll be giving out one of our high demanded courses for free to only top 2. We'll be running a random lottery, as it were. So we'll just give top 2, not top 2, just random 2. And that selection process will happen very soon. We'll be sharing a link with you on the chat room for you to just give us a quick feedback on how you've been enjoying the conversation so far. I would hand over to Joachim Adenusi to coordinate the Q&A session for, would have Mr. Lawrence, would have Han, and would have Mark Miller to take your questions, to answer your questions and answer. Over to you, Joachim. You may want to unmute your mic. Kindly unmute your mic.
Okay, can you hear me now? Sorry.
Yes, very well.
Thank you very much, Femi, for the update. I am so much enjoying this ride. I mean, it's like watching a blockbuster movie and just going through and just looking at all the key points. I'll be taking your question. I will just be looking at, this is where we ask these 2 gentlemen practically something that will help us, that we can take away. I mean, one thing we don't want to do is just to have a talk, like conversation where we just feel we just call another education, but please something that will help you, your journey, where you are with your project, and in terms of what will help your project move forward. So I'm just going to start. If anyone has a question, otherwise I'm going to start the question first for the 2. Any question first?
Sorry, Joachim. If you have question, you can indicate in the chat room, or you just raise your hand in the chat room. So we'll be able to unmute you and you'll be able to ask your question, please. You have to indicate first.
So I think question first for Khan. You mentioned about, I'm going to ask you the first question. You mentioned about getting a lot of people involved beyond just those 2 technical departments, accounting and actuarial. What else did you do to actually break the jargon down for non-technical user? Hamad, what did you do to get the whole business and choose and get them alongside this project?
Look, it's a very good, interesting question. And I think it was definitely a struggle. When you imagine when you have a property underwriter or a liability underwriter, medical underwriter sitting down and listening to IFRS, they would have actually no clue what we talk about. And imagine you bring a reinsurance who basically buys facultative arrangement and say, look, hey, by the way, we're coming up with IFRS 17, you need to do a trust me, it's not easy. And I think what we've been able to achieve is we have really taken them through slowly and steadily. I think we started about what we do now, because they cannot understand the IFRS 17 journey unless they don't understand IFRS 4. And by the way, it's not their job. But now they have to understand that IFRS 17 is something that they need to get involved into. You just cannot be just an underwriter or a fact placement or someone who could be working in a claims department, because they need to understand that everything they do has an impact. The other thing that what we really tried that has been very successful is we probably tried to speak their language.
Okay.
A group of contracts. I mean, how did that impact them? When for example, when I explained to them, about cross subsidization. So when I talked about onerous contract, they said, what is onerous contract? And why do I care?
Yeah, exactly.
Look, now it's not the case. You look at overall portfolio, and then you look, but now you need to look at the onerous contract, and then we say, look, there is going to be quantified. You cannot price it, the way because you want to make it business. But then he said, but my portfolio is profitable. So those discussions then come in slowly and steadily, and I think patience is virtue. Patience is very important. We need to take them through. And let me tell you, if I, being a CFO, stop thinking about the IFRS, and if I do only just my job, after a month, if I want to understand IFRS 17, trust me, I'll be back to zero. So it's very important that we need to constantly educate, keep them in touch, keep in the loop. And henceforth, that's why I'm coming back, that you need to have champions, each in respective department, and you need to be hooked with them, and they need to be hooked with you, so they know exactly what's going on, and they become the ambassadors for the respective departments. So yes, it's a long journey, and as I've said, that could have been a bit of my success story, but that could be very different approach on a company to company. So I think we learn with how we go. Now I can tell you today that my reinsurance department, underwriting departments are extremely involved in IFRS 17 because they know, but of course not the entire project, but relevant to them, and they understand the implication if we take different decisions, and that's what's important.
Thank you very much. I think the idea of just speaking the language is important, because often you find that professionals, we talk to people who are non-technical with technical jargon, and that I've seen as one of the biggest conflict in terms of carrying people along. But if we can kind of operationalize those words and go to their world and patiently engage with them, that will work. Thank you very much for that. Tato, you have a question quickly. Who is it for?
My question is actually for Mark, and it actually relates to the pricing of the solutions. I think at Continental Re, we've had a look at a couple of solutions and the pricing, and I'd really like to hear from him on how the pricing relates to Solvency II solutions, and whether in terms of the markets they sell their solutions, they've considered the different markets, or they just apply one price across all markets, because I think African insurers will struggle with looking at the pricing of some of these solutions. African insurers will struggle to afford them, and whether he sees the price falling as more insurers take up the solutions, because that way they'll be able to recoup their development costs faster.
No, thanks. Yeah, absolutely. I mean, cost is a very big issue, and we're very aware of that in Legerity. And our pricing, I think we look at pricing in three ways. So you've got the implementation effort, you've got the license, and of course you've got the ongoing operation. So why we launched our Fast Post Express is exactly those concerns that you mentioned, that we need to cater for the budget constraints, in different markets with different economics, and therefore what we don't offer, a one product fits all. So our pricing is based on how big you are and how much of the system that you need to make. So you only need to take from Fast Post what you need, and that can really help reduce the cost. We also recommend using the cloud, and the cloud significantly reduces the infrastructure costs. We don't have any expensive licenses for other technologies, and with the cloud you can pretty much have it as a when you need it. So you're not buying great big servers that sit around doing nothing most of the month. You can kind of use the cloud as and when you need it. And the big cost is obviously implementation, and for that, that's the importance of our accelerators. So we're able to do the projects, between 6 and 12 months, depending on the complexity. So quite short timelines. We don't waste time. We go straight in there, and the project timeline is very efficient. And around that, we work now with a number of different partners, advisory firms and other firms, and we can support our project effort with resources relevant for the local market. So by working with local partners, we keep the economics of the cost related to the jurisdiction that we're in. And that's similar with our ongoing operations as well, where we use offshores to keep the costs down for the software as a service costs ongoing. So our approach on pricing is, I can't give you a price, and that's deliberate because we make sure our pricing is very competitive and tailored to each of our individual clients and their markets they operate in.
Okay, thank you very much, Mark. Tolu, I'll quickly take your question because we have 2 minutes left.
The question I have is for Aman, and it has to do with the policy paper it mentioned. I would like him to please give a brief description of what that policy paper would entail.
Thank you.
Thank you so much. Look, I think the policy papers that said is going to be nothing but your accounting policies that you would adopt. Now, let's understand for the fact that, like, for example, now how you earn your premium is 1 on 365 method, right? That's an accounting policy. For us, you will have to decide to start with what is going to be your level of aggregation and how would you define your group of contracts? At what level would you want to qualify as an honest contract? For example, you have a motor book of business. Would you accept a motor as at one level of aggregation, or because it's managed actively together? Or would you say, no, motor comprehensive and TPL, I would keep it separately as a different level of aggregation? So that's an accounting policy. The other policy you may have is, what are you going to do with your recoveries? How do you manage your recovery, salvage and subrogation? You will have an accounting policies relevant to discounting. What is going to be your policy around discounting? At what level are you going to manage your risk adjustments? So whatever you do, it's basically then translates into a policy, and some of the policy will then translate to your accounting policy that actually will drive the implementation. So my very humble suggestion to you is, while you're looking at systems, you really need to decide what you want to do. And I did show you that that slide which had CSM, your risk adjustments, expense allocation. Expense allocation is a paper, right? Because you will have to decide how are you going to allocate to them. IFRS 17 has explained some of the elements that what kind of expense needs to be allocated, but how, what will be the approach? So those things will then need to be aligned, and some of them will probably have to go taken to the board for the approval. So, and why I say it's very important, because you will never be able to implement IT system unless these policies are agreed, not even with your consultants, but please make sure you agree with the auditors, because the last thing you want is you get in an IT system, you implement, by the time when you're about to go live, the auditors will say, hey, I don't agree with your policies. And I just, so you need to make sure that you bring them on board well before the process initiates. And I think that's extremely important. And that's what we're doing. We have just now embarked in engaging our external auditors, because we don't want to invest. By the time we have already invested, we don't want the auditors come and disagree with a different view. As you know, you have all the big fours, they will always have different set of opinions. So we need to align the thought process.
Thank you very much. I think, which is interestingly, in looking at the project risk or implementation risk, I think for everyone on this call, if you don't have a project risk or project team running this project, multi-stakeholders, you need to set it up. But I would say, in terms of policy inconsistency or conflict, to resolve that before you begin to finish your critical conclusions, that would be a threat you want to put as a potential issue that might affect the implementation of this project. I'm not sure that we have another question. We're going to go for a short break, 10 minutes. Please go for a walk. Make sure you stretch your leg. This is a virtual event. We don't want you to stay glued to the screen. We don't want to over Zoom you, over Team you. So please grab a cup of tea or coffee. If we had the technology, I've always been saying this, I will have pressed the button and I'll ask the coffee shop to drop tea and coffee to your various locations, but it's not happening yet. I think in another few years, we're going to have a drone being able to drop your snacks and sandwiches to your various locations. So we'll see you soon in 10 minutes. Thank you very much. And I hope to speak with you soon. Let's take a short break, please. We'll be back at 11:40-ish, 11:43 here.
IFRS 17 is complicated and brings a big change in global accounting standards. As an insurer, you will have lots of vendors trying to get your attention. Our approach at Legerity is different. It's based on decades of experience in accounting rule software and delivering IFRS 17 projects for some of the world's leading firms. FastPost Express does exactly it says everything. Other solutions can be heavy, complicated, and often designed for other purposes, even other industries. All the stuff that just weighs you down. You benefit from a reduced implementation. IFRS 17 is complicated and brings a big change in global accounting standards. As an insurer, you will have lots of vendors trying to get your attention. Our approach at Legerity is different. It's based on decades of experience in accounting rule software and delivering IFRS 17 projects for some of the world's leading firms. FastPost Express does exactly. It's everything you need to be IFRS 17 compliant, with no fuss, and will set you up for the future, whatever that might bring. Other solutions can be heavy, complicated, and often designed for other purposes, even other industries. All the stuff that just weighs you down. Some are positioned as light, but are full of empty promises. In fact, you actually end up spending more time, money, and effort than you were led to believe. And if you're tempted to solve in-house, you will find out the hard way that IFRS 17 isn't a problem you can tackle with spreadsheets. So why compromise? With Legerity's FastPost Express, you get an enterprise-grade IFRS 17 solution, pre-configured and SaaS delivered from a team with a track record of success. You benefit from a reduced implementation time, complexity, and expense, giving you regulatory peace of mind and a clear path beyond compliance. Insurance is about managing risk. Choosing your IFRS 17 solution shouldn't be one of them. Legerity. It's our business to take care of yours.
To the welfare and prosperity of the king.
To the welfare and prosperity of the king. You really must be serious for you to come all the way here.
No, we all have our part to play in this great kingdom. Oba the dollar, our king, thirsts for more lands.
I've heard you, but I will not leave until I'm satisfied that something is done.
And do they know about their disappearing?
Disappearing?
mother cannot sleep, when sickness keeps her children awake. I will not rest till justice is served.
It is fear that really tries to conquer us all.
I hear voices telling me to run. If I only understand of something, I have what it takes to overcome. You are stronger than you ever will know.
Mimi, where's your mommy?
A major part of being a parent is being present.
I struck out,
And the winner is Mimi
fast
Idris.
as I could.
Stay in the picture and be the parent you want to be. Call 0700 AXA Mansard today to speak to an AXA financial advisor.
I say welcome once again, everyone. Thank you for standing by and for being with us since the beginning of the summit. We'll be moving into a panel session shortly. And in this panel session, we'll be looking at a few things. We have on the panel, we have some amazing speakers for the panel session, and I'll be welcoming them and introducing them in a second. The topic we'll be looking at during this panel session is overcoming implementation milestones and roadmap risk in Nigeria. I take that again, overcoming implementation milestones and roadmap risk in Nigeria. We have three panelists that are going to do justice to this topic. All right, and the first on the panel is Oyinlade Olalekan. Oyinlade Olalekan is the MD CEO of Old Mutual Insurance. Also on that panel, we have Yvonne Palm. Yvonne Palm is the Chief Risk Officer of African Reinsurance. Then we have Fatou Halof, who sits on Risk and Actuarial for Continental Reinsurance. We have Unjum Uma Onyemenam, who is the Chief Financial Officer of Unsia Insurance Limited, and Rashidat Adebisi. I'll be taking their profile one after the other, but to start the conversation would be Oyinlade Olalekan. Oyinlade Olalekan, as I said earlier, is currently the managing director of Old Mutual Insurance. He would be running through his slide presentation in a moment. He has over 22 years cognate experience, and is in his last role prior to joining Old Mutual Insurance. He was an executive director of operations at Veritas Capital Assurance, where he was responsible for the overall business development and technical operation of the company. He's a graduate of the University of Lagos, an associate of the Chartered Institute of Nigeria, ACIIN, the Council of Registered Insurance Brokers of Nigeria, as well as members of the Chartered Institute of London. Ladies and gentlemen, Oyinlade Olalekan will be going first with his presentation. Each panelist have about 7 to 10 minutes to talk on that topic, and afterwards we'll have a group question and answer, which will be anchored by Wakim Adenusi. But for now, let's have Oyinlade Olalekan.
All right. Good afternoon, everyone. Good afternoon, participants, fellow speakers. It's a privilege being here. I think the last 2 hours has been exciting for me. If I may use a mad word, the more we discuss IFRS 17, the more we see the confusion. But we have no choice than to enjoy the confusion and make the best out of it. What is this IFRS 17 all about? We need to get a clear understanding of what this is all about. And for me, I'm just speaking to 3 slides. The impact of IFRS 17 on us before I wrap everything up. I think my previous speaker has spoken to how this is going to affect the landscape, how complex it is, how is it going to affect our operation, how is it going to affect stakeholder. But what we need to know, and I'm speaking now both as an operator, as an MD, and I'm wearing the cap of a director. I think where the impact is going to be felt most is we have to look at the cost. The cost of implementation is going to be enormous. Processes are going to be disrupted. We've been used to certain things, but from the snippets that we've seen from the discussion today, a lot is going to change. Our policies are going to change. Our accounting system are going to change. interpretation, depending on who the stakeholders is. Are you a director? Are you a regulator? Are you an analyst? Interpretation is going to change across. In terms of data, I'm happy to hear Ahmad said, all over the world, data is becoming a big issue, not only in insurance, and not the size of the data itself, but the quality of our historical data. How is this going to affect what we are doing going forward? What about our people? We will need to invest in terms of training, in terms of alignment of roles. The people in actuarial world, they have their own job cut out for them. But going forward, we will see more synergy between operation, the actuarial people, the finance people. What about the system? The system we have today, is it capable of doing what we need to do going forward? Is this system capable of forecasting, planning? Is it capable of doing our budgeting process? These are some of the things that we need to quickly work on to ensure that in the implementation process, we factor in all this. But if I may summarize this slide, everything still boils down to cost. And I think that is where engagement of the stakeholders is very, very key. Everywhere you go to, I mean, people on this panel, my co-panelists can attest to that the board of directors of so many companies are worried not only about the cost of implementation, but about the value of their investment post IFRS 17. Are they still going to get value on their investment? But we need to engage at this point to let every stakeholder know that this has come to stay with us. What is going to change? Maybe there will be changes, but ultimately, I think the benefit is what we should look at. We should look at how to make our organization agile, how to implement a comprehensive training. Because sometimes we we tend to see this as being finance issue. It is not finance issue. It cut across the whole organization, from underwriter to actuary to finance to claims people. We need to bring everybody on board. And I like what Joachim has made mention of. We need to have in place a project management, because this is a huge project, and if not well planned, the result can be fatal. That's why we need to put in place a big project team that will encompass all arms of the organization, so that at the end of the day, we will be on the same page. And for me, there's a whole lot of noise around IFRS 17. But the reality is that 2 years ago, when we had this postponement of the implementation date, nobody ever thought of COVID-19. And COVID-19 happened in 2020. That took away 12 months out of the timeline. So in going forward, in 2021, we've lost 1 year, which we have to find a way to recoup. And the only way to recoup this is to ensure that there is synergy among every body that is working within the project team. I believe at the end of everything, what are we going to see from IFRS 17? We're going to see consistency and uniformity of reporting. This has been a challenge all along. Are we able to compare apple to apple? Even though we're in the same insurance company, insurance world, are we able to pick two financials and be able to make sense out of it? But with IFRS 17, I believe this is going to be better. The data that we talked about, data is an issue. Data is a key element for any insurance company. We are going to have a standardized data. We are going to have a centralized data. Going historical will be better. Making forecasts will be better. Planning will be better. And in terms of reporting, provided that you have a very good reporting system in terms of your core business application, I'm not talking about looking at the IT or looking at the infrastructure in terms of IFRS 17. I'm talking about end-to-end IT structure. Reporting cycle will be better. Today, to get report out either on a monthly basis, quarterly basis, or even for those listed companies, it's a nightmare. But I believe with IFRS 17, reporting cycle should be low. And from my own end, where do I see this? There's going to be integration of all functions. Today, there seems to be silos in terms of what finance is doing, what risk is doing, what underwriting is doing. But with IFRS 17, I think we have gotten the opportunity to link all process together. And once we link all process together, the flow will be better, our reporting will be better. Even analysts, I'm sure, will be happy to look at insurance book and be able to make sense out of it. So in summary, for us to overcome the implementation challenges, I would say for all the stakeholders, especially the board, those who own the check, I think we need to make finance available. In the WTW survey that Amar referred to, 30% of the respondents says is IT and data. But in my mind, I'm saying, depending on who you are asking, if you ask those who are running the business, I'm going to tell you it's about fund, it's about the cost of training, cost of getting software, cost of putting processes in place. So those who are in charge of the check need to make the fund available. That's number one. Number two, we need to redouble our effort. We've lost 12 months due to COVID. So we need to work more than ever. We need to work more than 24 hours if possible. And thirdly, training of our people. What is going to demand going forward is a new knowledge, is a new way of doing things, and we need to invest in people that are going to manage the process going forward. So if we're able to do these three things that I talked about, I think implementation, irrespective of our fear, irrespective of the noise, irrespective of the disruption that we think IFRS 17 is going to bring, I think we will implement it. Will there be teething problem? Yes, there will be, but with time, I think we can fine-tune this. I'm comfortable and I'm happy with what I've heard about the UAE model. It means that if there is collaboration between the operator, regulator, and all the stakeholders, I believe that at the end of the day, we are going to benefit from this. So from my own end, I believe that this is doable. I believe of the positive that we're going to get out of this, and we should just hit the ground running. So I will yield the floor at this moment, and let's engage more. Thank you.
Thank you so much, Mr. Oyinlade, for your brief presentation. 3 challenges you highlighted: time lost, the finance required to make this happen, and training capability. Thank you so much for your time. I'll be going on to the next panelist, which is Yvonne Palm. Yvonne Palm is the Chief Risk Officer of African Reinsurance. Yvonne Palm, I'll just read through her profile quickly. Yvonne Palm also has about 7 to 10 minutes to quickly do justice to the challenges we may be encountering matching this milestone set by the regulator. She's the Chief Risk Officer of African Re. Prior to joining African Re, she served as the lead corporate actuary at Traveller Syndicates Management in London, overseeing reserving, technical provision, business planning, and reporting of results to regulator management. She's worked across different continents. She's a fellow of both the Casualty Actuary Society, USA, and the Institute of Faculty of Actuary in UK. Ladies and gentlemen, please welcome Yvonne Palm for her session.
Hi, everybody. Thank you very much for that intro. I'm really excited to be here, and I found a lot of the discussions very interesting. So I'm just going to try and give us a few insights just from a risk perspective. So from a risk perspective, when you look at the IFRS 17 requirements, a lot of the detail is in the disclosures. So if you compare IFRS 17 to IFRS 4, IFRS 17 does go further in terms of what it's requiring to do. IFRS 4 just talked about providing information that will help you evaluate the nature of your cash flows, but IFRS 17 talks about the amount. In fact, IFRS 4 wasn't even talking about cash flows, but that's another thing. It requires you to evaluate not just the nature, but the amount, the timing, and the uncertainty of your future cash flows. So that's going to involve a lot more work in terms of your disclosures and providing information about your risk, whether it be your insurance risk or your financial risk. For each risk type identified, IFRS 17 has specific requirements for your disclosures, both quantitative and qualitative ones. I'm just going to go through a couple of them just to set the scene a little bit. So the first one I wanted to touch on is the effective regulatory framework. So this is a completely new requirement or new disclosure that you'll have to make in your IFRS 17 financials. I actually don't think this one would necessarily be that much of a burden for companies. You should know your regulatory environment. It just means now you're going to have to state it and state exactly how it's impacting your financials. The second one is in terms of your risk. So for every type of risk, you're going to have to mention the concentrations of your risk. So this is actually not something that's new, but the detail in which you're going to have to explain it is going to be different. So it might be good to start thinking through this and thinking through how you've been reporting on your risks and how you might be able to improve that. The third one is in terms of insurance and market risks and your sensitivity analysis that you're doing. So this is expanded, and actually I think this might be where some companies might struggle if you do not have a sensitivity testing framework. So I would advise that maybe we start as soon as possible on this, and also it will also give you time to understand the information that's coming out in your test and help you better explain it when it comes to actually reporting on it. The fourth risk I wanted to touch on was insurance risk with respect to claims development. So IFRS 17 does have specific requirement for you to disclose your 10-year actual versus expected analysis and reconcile it to the liability for incurred claims. And I think this might be another area where in the Nigerian market, people might struggle if you don't already have an actual versus expected framework included in your reserving. I actually think that this requirement is one that you should be doing anyway. So even if IFRS 17 wasn't there, it's one you should be developing into your analysis. And it is one that people will take some time to understand as well. So I would advise that the risk managers are working with actuaries and ensuring that you're using an actual versus expected analysis as a tool to evaluate your reserving adequacy. And again, start now. This is something that will take some time to understand. Even if you get a consultant to help you, you will still need to understand and explain it. Then the next risk is in terms of credit risk. I think someone's already touched on this, on how the additional requirements with respect to that. In addition, you're also going to have to report on the credit quality of your reinsurers. So some people might not be tracking this data. Again, I think data is what we've heard a lot about. But this is another element where if you're not tracking, maybe you start looking for ways to start ensuring that you have that information. And it always helps to have more than 1 year's worth, so you at least have something to compare with when it's time to report. And then last but not least, on liquidity risk, there are also additional requirements there in terms of disclosing information relating to your net cash flows, as well as amounts that are payable on demand. So, I mean, there are quite a few elements of risk that you're going to have to go quite deep into, or deeper than you did before. And my advice really is, for everyone, including myself, is start as early as possible. For some of these things, it will take time to understand. So even if you you manage to have a framework in place in time for go live, you still need time to understand it. So it's better to try and implement some of these earlier, so you can be evaluating along the way. What I also wanted to touch on was KPIs. I think one of the previous presenters did a really good job on giving examples of how KPIs are changing. But from a risk perspective, I think it will be important for you to make sure you go back and reevaluate your risk matrices and reevaluate your risk tolerances, because they're going to have to change as well when we have different statistics from IFRS 17. And some of them might actually be more relevant to assessing the business. So I think start looking through that, start reevaluating your risk metrics to see if there's ways you can change to be more in line with IFRS 17. And also just keep in mind that you will probably have to do dual reporting on these matrices for a couple of years, because it's going to take people some time to understand the IFRS 17 KPIs. It's a whole different way of thinking. So I think you would have to report on both of them until such a time that people get comfortable, and maybe you'll be able to switch completely to IFRS 17. So I think everybody has mentioned something about opportunities, which is great. And I think one of the previous presenters, Hamad, he had mentioned how you could either see IFRS 17 as a nuisance or headache, or you can try and enjoy the process. So I think what will help in terms of softening the blow in your implementation is to try and also focus on the positives. So from a risk side, the four that I wanted to mention, I think other speakers have gone through many others as well, but the four I wanted to just touch on are the first, with IFRS 17 being intended to be a truer picture of your profits. I think this is going to help actually quite considerably, because people can't hide behind aggregations. So hopefully that means that you will have a better process of identifying profitable and not profitable business. Then from the risk side, that means you'll also make it easier to identify opportunities to pursue, as well as areas where maybe you need to tighten controls or rehabilitate the business so that it can become profitable. So I think that's actually a big win on the risk side, and it's hopefully other risk managers are seeing that as something very positive. On the topic of more collaboration, again, I think this is something that as a risk person you should be very happy about. So if we're breaking down silos as a result of IFRS 17, it's going to help people to start thinking or having a more enterprise level view of their own actions. And I think somebody mentioned how underwriters will have to start thinking more about this. And as a risk manager, you should be over the moon with that, because that's something that you probably have been trying to do, in your everyday job. And IFRS 17 is giving you a boost, just like COVID-19 gave us a boost with technology. I actually think we should view IFRS 17 as something that will give us a boost in this area. And from a risk perspective, you could try and leverage this and see how maybe you can incorporate some risk elements in the training, or even try to move towards a standardized language. I think that was also talked about before as well. And then on the topic of analytics, as there'll be more information, more databases, more places where central locations where assumptions need to be kept. I think it'll also present an opportunity to be able to harmonize our analyses throughout the organization. So from actuarial reserving to capital management, if that's done in your risk department, you'll be able to harmonize that a bit more, and hopefully that will mean that the results you're getting from these analyses are more relevant, and you can actually use them more readily in making decisions. The next opportunity I wanted to mention was in terms of modernization. So we've talked about new systems, possibly new actuarial finance engines. But yeah, from a risk perspective, we should view it as a way to try and bring in more sustainable processes into the organization. I think almost every company or every company will have to spend money on these systems. So if we try and view it as a way to bring in more sustainable processes, to bring in more automation, which means more efficiency, that will bring more value to the corporation, and hopefully the idea of cost that maybe many CEOs have on their minds you'll get more value from that. And last but not least, improved governance. Again, this has been mentioned before, but with IFRS 17, you're going to have to document everything, every assumption, everything. There's so much more data because there's so much more documentation. But again, I think risk managers and compliance people should see this as a huge opportunity, because this is it's going to lead to better governance, and maybe you might even be able to leverage it again and seize opportunities to introduce new policies that you might have been trying to, but people didn't see as relevant. Maybe like a new reserving or more detailed reserving policy, for example. This is a very good way to introduce that. And definitely you'll make more strides to improving your governance within the organization. And last but not least, I was just going to, I think people sometimes say that risk managers might not have too much to do with IFRS 17 and they shouldn't be bothered. But hopefully from what we've been discussing, you'll know that we certainly should be bothered about it. There's so much for us to do within the scope of IFRS 17. And at the very minimum, project risk oversight management is something that will concern you. And you know that the earlier you start, and hopefully have started, the better. And again, one of the previous speakers has done really well in talking about project execution risk. But there were two things that I wanted to just touch on. And one was in terms of quality assurance. So ensuring that you bring in your quality assurance partners, whether it be your auditors, or if you have unlimited funds, which we don't, but have a few quality assurance partners that you can relate to. I think that would help with the issue of when you change auditors, somebody might see things differently. But I know we don't have unlimited funds, so you just need to find your sweet spot. But with respect to quality assurance, it is important for you to identify areas in the project where you are going to bring in this partner. Don't wait until the end to find that you went down the wrong rabbit hole and you need to now try and come back up and move to something else. So try and identify areas within the project. Hopefully, don't wait too long. Identify small chunks of the project where I'm going to bring the quality assurance partner here in to just make sure we're on the right track so we can move on to the next one. And then the last thing is just don't ignore your dry runs. I think those are extremely important and will help identify where your holes are and where your big gaps are that maybe you need to close before go live date. So that's it for me, and I'll pass it back to the moderator.
Thank you so much, Yvonne, for your session. Quite insightful. I'm glad you were able to look at the upside risk, and you mentioned 4 key things as element of the opportunities, the upside risk that we also should be looking at. Said we should look at the truer picture of this IFRS 17. It would allow for more collaboration, modernization, and improved governance. Thank you so much, Yvonne Pam. We'll come to a question and answer later on. But I'll move on to the next panelist, Thato Halof. Thato Halof is the regional head of actuarial and risk for Southern Africa at Continental Reinsurance. He's an experienced actuarial and insurance professional with diverse experience across the insurance value chain. He has worked in life and non-life insurance and reinsurances, as well as insurance regulation, where he helped to deliver change and managed complex process improvements across projects within the actuarial operations and underwriting function. He holds bachelor's degree in mathematics and science, and also quantitative surveying, and also a master's in actuarial science from University of Leicester in UK. Ladies and gentlemen, Make welcome, Thato. Hello.
Thank you, Femi. Good afternoon, everyone. So in addition to my role as head of risk and actuarial for the Southern Africa region, I'm actually the project lead for IFRS implementation for Continental Re. And I'll share with you our experience in terms of implementation of IFRS 17, our journey so far, and the key learnings. So it will be just a very short presentation on that. I believe that will bring it closer to home. I hope you're able to see my screen from that side.
Yes, yes.
Okay. Yes, so our journey at Continental Re, can you see that milestone slide?
Yes, your slide is up, page 1.
Okay. So our journey at Continental Re really started in 2018, where we started with a gap analysis, just to see where we are and where we need to be in terms of the IFRS world. And we looked at our data, we looked at our processes, we looked at people, skills, and knowledge. And with that, naturally, it flew into a project plan. So we identify all those gaps, and the project plan was just about what we need to do to get to the IFRS 17 world. So that was in 2019 when we came up with the Gantt chart for the project. We also realized that we need a cross-functional team, a cross-functional project team to implement this, because most of the requirements actually cut across several functions. You have underwriting, which will help us determine profitability of contracts and really understand the risks that these contracts cover. We have actuarial, where you have the cash flow modeling, the risk adjustment calculations and all that. Of course, you have the finance. Then finally, you have the systems part, which is IT. But later we realized that we need to bring in also technical, our guys who administer the business on our system to get a better understanding of the data needs and the data gaps. So that was in 2019. We also did a training for the core team. Remember, the core team cuts across finance, actuarial, and IT, and we have also included underwriting and technical. Then from there in 2020, we gained a bit of traction. We started with a high-level system design, because from the gap analysis, we could tell the functionalities that the systems need to perform. So we came up with sort of a very high-level system design, and we identified those system gaps in the system design. Then that led to us now starting discussions with system vendors on how we bridge those system gaps within that high-level system design. We also realized that we needed an implementation partner to help us make those important decisions, those policy decisions, those methodology decisions. And that discussion, I think, spilled over into 2021. We are, I think, at the final end of the system vendor and implementation partner selection. And I think in 2020, we also were procuring a system for our agricultural function, which was able to reserve and do a bit of capital modeling. So we incorporated the IFRS 17 element there to include the calculation engines for IFRS 17. Then this year, like I said, we are trying to conclude on the system vendor and implementation partner. But we've also now moved further to start looking at the key decisions that we need to make in order to implement IFRS 17. Those are accounting policy, which we discussed earlier. And the methodologies, how do we project our cash flows? We are used to projecting only the claims. How do we now move to projecting our expected premiums? How do we calculate the risk adjustment and all of that? Then we also continue with capacity building within the core team itself. And we've realized that we really need to move to the whole organization, because this is a very big change management project that we need to undertake. Everyone needs to be aware of what's coming. And previous speakers touched on KPIs. They touched on underwriting, they touched on systems. So this IFRS 17 really touches each and every function within the business. So everyone needs to be brought on board and carried along through this implementation. And we are also, as we learn more, I think as we engage with the system vendors, we are able to fine-tune our design. The thing about IFRS 17, I think Hamid gave a very good example of that guy building a bridge as he walks on it. You need to start doing, and as you do, you learn more. And I think that's what we've seen. We are refining certain things that we did in the past, and we continue to learn each day. And of course, after we select the system vendor, we'll need to start the implementation, and that's planned for this year, with possible dry runs beginning of next year. Then, so that was sort of the milestones that we've achieved so far. Then when moving to the key learnings, I think the first one is cost. What we've noticed with the current solutions, or what solutions that we've seen in the market, they're quite pricey. But one would ask, in relation to what? I mean, IFRS 17 is the first major change within the insurance industry. So if you say the system is costly, what are you comparing it to? Have we had such a big change in the insurance industry? And maybe rather look at it as an investment, because I don't see us getting another insurance standard in a very long time. So it's an investment into your reporting process to have a more efficient reporting process. And I think it's an opportunity for us to actually automate the reporting process. We have an excuse now to spend on automation because of IFRS 17. I think the second learning there is capacity building. That needs to be continuous. IFRS 17 is a very complex standard, and you won't get it in the first go. I mean, you can do one training, two trainings, but you won't get it. You will get it after a couple of trainings, or after some time. And it's a principle-based standard. It doesn't tell you do this. It says this is the outcome. You need to get to this outcome. So there are multiple ways of achieving one outcome. So that's the complexity around IFRS 17, and that's why training needs to be continuous for us to really get to understand the standard. The third one there is a greater collaboration between the finance and actuarial functions. In many organizations, finance and actuarial functions were working in silos, but under IFRS 17, we'll need for finance and actuarial to work closely together in order to comply. So you'll find that accountants will need to know a bit of what the actuaries are doing. Similarly, the actuaries need to know a bit of what the accountants are doing. And I think in the long run, we'll sort of have a hybrid reporting team made up of finance and actuarial. The other learning, I think, is the data gaps. IFRS 17 comes with a lot of data requirements, and you will have gaps. I don't see any company having all the data they need to comply with IFRS 17. So I think you need to do a sort of a data gap analysis to determine what data you don't have, and make the right decisions on how you are going to bridge those data gaps. Then finally, automation. I think automation will be key. If you look at IFRS 17, the requirements, we have more requirements. So if for example, your monthly reporting took 2 weeks and you're not going to change your reporting processes or systems, you might need to spend another 2 weeks, maybe 4 weeks or a month for monthly reporting. Similarly with audit, because of the requirements, more requirements and more data that you need to handle. If you're not going to change systems or processes and automate, you might need to change. Now your audit might take maybe 5 or 6 months if you are going to stick to the same, the current reporting process, because the requirements have doubled, more than doubled actually. So I think what can save us is a really automation. So those are the key learnings, and I think in conclusion, what I can say is we really need to start the implementation process. You can have two approaches. I mean, one would say, I'll wait and see what the industry will do, what other industry players will do. But I think right now, we ran out of time for that wait and see approach. And there's that extreme approach would be fail fast, but fail forward. Because like I said, IFRS 17 is a more principle-based standard. So you are going to have a point where you iterate between different solutions. You go back to a decision you previously made and have to change that. So it's more of experimentation at this point. But because of the looming deadline, that needs to happen. or you can choose something between those two approaches. But I guess we'll talk more about implementation on the panel discussion. That's my presentation. Thank you.
Thank you very much, Tato, for your presentation and for running us through your journey in Continental Reinsurance. I'm sure there will be questions during the Q&A session. Thank you, Tato. Next panel discussant is Unjum Uma Oyemenam. She is the Chief Financial Officer of Unsia Insurance. She's a chartered accountant, a seasoned financial professional with over 19 years of experience in strategy, business planning, and management. What is interesting about her role is at the moment, she currently serves as the chairperson of the NIA, that's the Nigeria Insurance Association Accounting Technical Committee, and she also serves as a member of the IFRS 17 work group for the association. Ladies and gentlemen, let's get more insights on overcoming challenges, roadmaps, and milestones for IFRS 17 implementation from no other person than Unjum. Unjum, over to you.
Good afternoon.
Good afternoon. Could you please be a bit more audible?
Good afternoon, everybody.
Good afternoon.
In a very I'm going to be discussing
Unjum, we're struggling to hear you. My guess is your bandwidth is perhaps low where you are. Do you want to change your internet service provider? We're struggling to hear you. Okay, whilst we await Unjum to sort the internet issue, would go to our next panelist. The next panelist is Rasheedat Adebisi. She's actually the Chief Financial Officer for, not Chief Financial, sorry, Chief Client Officer for AXA Mansard. She has over 19 years of experience in different areas of the service industry, from customer service, financial advisory, accounting, audit, retail distribution. She became the Chief Financial Officer of AXA Mansard in February 2020 with a mandate to drive the successful execution of the customer-first journey and move from payer to partner of all AXA lines of business in Nigeria. She holds diploma in financial strategy from Said Business School, University of Oxford, BA Accounting, University of Lincolnshire and Humberside. She's a chartered member of the Institute of Insurance UK, an associate member of Chartered Accountant of Nigeria, and also a fellow chartered certified accountant in UK. Ladies and gentlemen, please make welcome Rasheedat Adebisi.
Thank you very much. I hope you can hear me well.
Yes, we can. Yes, we can.
See me as well.
Yes.
Thank you. Good to be here this afternoon. I think I started wondering how many of us could actually present along the same topic without repeating the same things. So, well, luckily I don't have any slides to share significantly with you, but I think some of the topics are common. And IFRS 17 is something we've been speaking about for so many years. I mean, we have the postponements, we have the engagements, almost like when we wanted to adopt IFRS in Nigeria. So there's a lot of conversation going on. Everybody feels that they're prepared until it actually happens. So on my side, I probably just want to touch on a few topics. Already some of the earlier speakers have really addressed the core of it all. How prepared are we? I would just want to simplify it and ask us that, are you telling yourself the right version of the truth? Because when it comes here, we can have consultants prepare analysis for us. They can do a lot of projections, but is it really true to your organization? Is it really true to your reality? And do you understand what it means to take certain decisions? I think this continues to be what we will all have to think about. You have to think about it because it's easy to have numbers down on paper, but the decisions you take today might not haunt you today. They might haunt you in 3 years' time. And having to go back to it might be extremely difficult. So there definitely will be a lot of things for us to think about. Some of my thoughts are around simple things like what we think aggregation of contracts at the portfolio level, looking at things with similar risk. Do we really have things with similar risk? Are we really assessing things from that angle overall? I work with AXA, and we're actually on the journey. We're in journey not just locally, but across board. But there are still some, realities that comes back to the local settings. How do we even offer our solutions? How are the solutions priced? Do we actually have market pricing methodologies where you have things like group life, prime rates? What does that mean when it comes to IFRS 17? Are we going to eliminate all of this from the market? Are you going to then create your own pricing, your own experience? So I think these are really, really tough conversations to have internally. And if you already are not on that path as a company, you would find out that it will be a bit more difficult. You might have the framework, but the information and the results you get will not be realistic. So when you think about cohorts, things issued in the same year, it seems very easy. But how are we really designing our systems to do this? Quite a lot of companies have legacy, applications. I've listened and spoken to different people, and they're all concerned about getting the right application. Which application should we use? Which one works? And I'm sure most companies are not excited about what they have. When you look worldwide, we don't have standard applications being used like banking has for insurance. So this gives us an opportunity and also creates its own challenges. And to adopt or adapt or build or buy any new solution doesn't happen overnight. It probably will take you a few years to implement that. And that's assuming you've taken a decision today. So if you haven't taken that decision, what are the sort of workarounds you're going to have to think about? I think is going to be very, very critical, because these workarounds have to be able to work perhaps from a data pool to look at it. And for me, it's just being practical. I appreciate the automation required, but automation of what? And who is going to do the automation for you? So I still see this as another side that we need to look at realistically. We've talked about all the technical things and the nice things, but do people actually understand even the language of the accountants, of the actuaries, of the risk people? We are saying that it's now going to be less of a silo, more of a collaborative effort. But how are we going to ensure that all these professionals simplify their language, truly understand what matters in their own organization so that they can bring out the results and embed this information in everyone the way they can understand it, the way a salesperson will understand it, the way some of the other key parties who HR providing you key information. Do we really understand? Do they understand? Do we know how to engage with them effectively? So there's still, for me, quite a little bit around here in order for us to overcome this obstacle. It's definitely possible. How do we do that? It's all about communication, simplifying our language, trying to understand how they and bringing the technicalities to them in a way that they can truly understand. If we don't do this, we would do all the amazing work. We'll have the great project managers, but the end result will be extremely, disappointing for all of us. Discounting of cash flows for me is also a very big conversation, and we've seen and we're talking about this. Perhaps more companies have been doing things around liabilities, as mentioned earlier, but we're talking about premiums now. How do we get everyone used to this process? How do we ensure that the capturing of information is complete and on time and in a way, and the systems can give us this information appropriately? The technology and automation are great, but will it happen on time? Are we already not behind if this is something that we need to do? One of the toughest side for me is this definition of onerous contracts. And how are we really going to determine what is onerous in our market? what is really the proper pricing methodology? Each company would have its own. I could be less or more. I know NICOM is actually working in this regard to ensure there's a lot more. I know the work groups, led by Unjum and all the other key parties in the finance technical committee, they are working on this. But how do we really explain to your own organization's leadership when there's something is agreed and it interprets your company's price in a different way? So the practices of proposing solutions to our companies will have to change. So this is the real reality. So from today, we definitely need to start sensitizing everyone. I think Lekon has already told us about spending money, but you have to spend right, you have to spend properly, but you have to understand how those decisions could impact the business. What sort of pricing are we using now? What is inside our portfolio at the moment? This cannot be on the area or the gambit of just the actuaries anymore. The business heads themselves, the head of sales, the marketing heads. How do we communicate? What do we do differently? I mean, we've always talked about the P&L changing and many things going off it, but it doesn't mean you lose value, because even if a business does not report in your P&L, it also reports in your balance sheet. So there's still some benefit and some value from there. How do we ensure that we create that balance? Because of course we continue to pursue gross written premiums, as that's what we rank and rate companies at. But when you think about it, in the long run, it's about what comes to profitability as well, because that's what can ensure the continuity of a business. And this will come from both gross written premium transactions and non-gross written premium transactions. So there's still a little bit of work for us to do in this regard. So I feel that there's some level of consistency and collaboration that has to happen. But the question is, how good have we been in this area before? And perhaps the best way to manage it is to start work now, to start to engage more. Even the granularity of the information when we're comparing, ourselves, when you look at the NIA reports, for example, we still have, miscellaneous, we still have a few lines that, have we already defined these products the same way? Are we say, and sometimes a transaction is being split or shared across different companies, and it reports inside different lines of businesses depending on how they interpret it in the organization. So how do we manage this? Because even after we adopted IFRS, we improved significantly, but we're not 100% home and dry. So this is definitely a key one. Systems we've talked about already, the upgrade that is required, the new accounting and actuarial methodologies we need to put in place. But it cannot just be those technicalities. You need to be able to distill it to the board, to management. So how are we really getting everyone involved, ensuring that we understand the language, we understand what it means for us. Perhaps you've already defined rewards and you have done a strategic plan over the next 5 years. So it means that strat plan is going to be different. So who's working on that strat plan now to say this is how it could be? This is what it would mean. And maybe there have been, performance pay and all sorts of things that everybody is waiting for. So it means that their reality will change. So we need to simplify, bring it to life and bring this language down to everyone under here. So I cannot overemphasize the collaborative nature that we all need to do. Of course, the high investment and retraining, but sometimes we underestimate the resources we need. For us also in our organization, we had to rethink resourcing and try and say, okay, how can we find that balance? But bringing external people or individuals to manage certain desks that has to do with IFRS 17 is just not enough. The real work will be how we embed the existing finance team members, the existing, risk people. I mean, risk guys are probably a lot more adaptable. The existing underwriters that you have, the existing people in all the different areas, how do you really get them on this journey? Because this is a huge change management project. So for me, apart from that project management for IFRS 17, is also the change management project plan that each company puts in place to overcome this hurdle. Understanding where the communication has to go out. If it has, do people understand it? And as someone mentioned today, perhaps it's not just telling people once or twice. This is something you have to live and practice. So I'll stop on the point that insurance accounting has always been seen as something that is very cumbersome, very complex before. And we're looking for comparability. But the comparability also brings somewhat complexities in IFRS 17. And this is our reality. And it would impact even the public. The regulators that we're working with, some of them will understand perhaps in the finance sections of the regulatory agencies. But what about the non-finance people? Because the implications around product approvals, for example, and the swiftness and some of the changes in the products that were approved before. Do we have to go back and approve all the products again? So there's still these few things that we need to work around to ensure that we can overcome this challenge. There's no choice. We're insurers. We cannot stop ourselves from adopting or from starting and taking up IFRS 17, depending on which language you want to use. So it now means that there's just a sense of urgency and engagement and collaborative importance, but actions have to start from today if it hasn't started already. So if you haven't started and you haven't advanced, it's okay. Just understand that the day you see that there is a gap, that's the day you take a clear decision to start to make a big difference. So I'll just sort of stop here and wait for us to engage at the session, at the panel session discussions. Thank you very much.
Thank you very much, Rashid. That 3 C's that you highlighted as very important in overcoming the challenges of managing our IFRS 17 implementation well. The first C, collaboration. Second C, communication. The third C, consistency. So these 3 C's are very important in proper embedding of this process, knowing fully well that it's a change managed process within the organization. Thank you, Rashida, for your session. We'll go back to Unjum. Unjum, are you back? Kindly unmute your mic, Unjum.
Yes, I'm back.
Great,
That's
great,
everyone.
great. Good to have you back. Great.
Good afternoon. I will be speaking again from another standpoint on overcoming the implementations associated with IFRS 17. It's known to all of us that by
Yes, your screen is up.
Okay, it's not all of us that by January 2023, we'll all be transiting and adopting IFRS 17. And the journey to implementation is very, very awesome. Organizations are figuring out how do they do this? How do we get into IFRS 17 proper? And I'll be speaking to overcoming this challenge, looking at this challenge from 2 viewpoints. I'm looking at it from 2 angles. There's an overall business operation implication, and there are the technicalities that we keep discussing all the time. We discuss the technicalities of IFRS 17, and then we forget to stay back and look at the overall business operations implication. So that bit of the technicalities overwhelms everyone involved in that value chain. And the bit of technicalities, everyone looks at it because this is an accounting standard. IFRS 17 is coming from an accounting standard. So it's all about accountants. It's all about finance, the finance function. And they leave it to the finance function to primarily drive IFRS 17 implementation, and then forget the business dynamics around it. So when you look at the overall business operational implications for IFRS 17, you find out that for the entire business, the insurance industry as a whole, there are fresh uncertainties for every stakeholder. Stakeholders have fresh uncertainties. The regulator is worried. How do I gain enough capacity to regulate the industry? The operators are also wondering, what do we do? How do I get to, how much learning can I get to on this subject? Who do I partner with? Who can help me? Everyone keeps thinking, what do I do? How do I go about it? So the uncertainties are much. The finance chain function is wondering, when on earth am I going to learn everything that the standard says? When am I going to read up everything? How do I go about this project? So it's a lot of worry for everyone who is in the value chain, who actually knows that, yes, IFRS 17 is something that is just around the corner. And so those uncertainties are there. We're wondering, are we going to meet up with the routines that we run every day? In this business operational implications, we also see that IFRS 17 is meant to be embedded into strategy. Many organizations have not realized that IFRS 17 is a strategy issue. Yes, it's an accounting primary subject, but then you need to map out a proper strategy. How do I go about this challenge that is very obvious and has come to stay? I need to enjoy it, like Hamad has said at the beginning. And then in mapping out a strategy, the strategy has to embed a project team as well. With how do we build up the project team? Who is going to manage this project team? And not just in building up a project team. Who is going to be? Are we going to leave anybody in charge of it? Should it be someone in charge of finance? Should it be the finance function, or should it be some other function that will manage this the project entirely? And then how do I design my roadmap? The question around the roadmap: what do we do with the roadmap? Some have roadmaps, some are still struggling with how do I come up with my roadmap? Because coming up with a roadmap also has to do with understanding of what it is all about. So these are business operational dynamics that that are implications that come about with IFRS 17 implementation. We also see some other challenges that we see in the industry. We see the industry having degrees of sensitization for various stakeholders. Various stakeholders are sensitized differently. We look at first and foremost, I use a slide to represent the level of awareness and this degree of sensitization among stakeholders. In the insurance industry in Nigeria currently, we see those driving this IFRS 17 implementation roadmap. Those driving it right now are the external auditors primarily, the actuaries, and we also see the insurance regulator following suit. The insurance regulator is also two key personnel above the external auditors, the external actuaries, are the ones who primarily are driving our industry right now and are saying to everyone, you need to get IFRS, you need to know that IFRS 17 is due. They've been talking about it since 2018, 2017. They've been trying to get our attention in the middle of how busy we are. So they have been the primary stakeholders that have been driving implementation of IFRS 17 in Nigeria. The auditors and then the external actuaries and the regulators. The regulator so far has also partnered strongly with this team of people to ensure that the industry is getting IFRS 17 compliance. And then we see that the first call that these people engage are the industry professional accountants. So they go to the CFOs, they go to the accountants, financial controllers of all the various companies, and they begin to engage them and begin to tell them about IFRS 17, how everyone has to begin to do something about it on time by getting late. And then when they get into the companies now find the organizations, maybe meeting the professionals, then the accounting professionals begin to tell them, begin to coordinate other stakeholders within the organizations. You see the technical teams. These technical teams, like we all know, include the claims managers, the underwriting functions, both the general underwriting functions and the life underwriting functions, calling them into the network of IFRS 17 implementation for organizations. They call in their internal actuaries, the internal actuarial desk, telling everyone IFRS 17 is on the line. However, we also bring in the control functions. We bring in the internal audits because there we also have professional accountants who will have to be sure that the organizations are being compliant with IFRS 17 requirements. And then we also, another set of people that eventually you now realize you need them for IFRS 17 to be compliant with IFRS 17 is that you need IT and the human capital management functions. the human capital management functions are very important, because without them, the capacity building, the trainings, and the knowledge base acquisition that stakeholders need to acquire IFRS 17 knowledge, you wouldn't get the technical, you wouldn't get that partnership in-house. So you find out that the finance function is struggling so much with implementing IFRS 17, with routine functions in the organization, having not enough time to go and acquire the knowledge that they require to acquire, while the IT function is also required to partner with the finance function and all these technical teams to identify the right solutions, to work with the consultants we decide to engage in the course of IFRS 17 adoption and implementation. We also see another set of people who the regulator will always ask us, have we carried along, who will also need to sign probably the cost budgets that is associated with IFRS 17 implementation and adoption. That's the board of directors. They also need to have knowledge. Not only that, they also need to have a very good knowledge of what IFRS 17 is all about, because like many of the earlier presenters have already said, there will be a major change and a major shift as it relates to IFRS 17. These are all business operational dynamics that IFRS said that is involved with IFRS 17. In our insurance industry today, we have the brokers and the agents. Yes, they are not the ones who underwrite the business entirely, but they're the ones who drive the pricing of our insurance products today in the market. It's also important. That's challenge. I doubt anybody right now is engaging them, but it's important to begin to also sensitize those set of people to know that business dynamics will change in the future, and they need to begin to collaborate with the other stakeholders in the industry to get pricing right. Like we all know from IFRS 17 is the data for 2021 is also going to come up as part of our opening balances in 2023 at implementation, at execution of IFRS 17. So whatever those brokers are giving us now and the agents are giving us now are part of the things that are impacting on the balances that the IFRS 17 compliance statements will be producing come 2023. So it's important to bring them into the bracket of knowledge, sensitizing them to know that IFRS 17 is going to be a major shift to what we do as an industry. The sales personnel as well, those who go to bring in this business, it's important at the beginning to know how to identify very profitable product lines and businesses that will enable us to have proper balances come IFRS 17 in 2023. Now I'll talk about the technicalities, the technical implications of IFRS 17. In IFRS 17, the technicalities are complex. We have a lot of terminologies that we need to understand. Users of preparers of financial statements, the accountants, all those who have to have an input into the financial statements have complex things they need to understand. They need to have a proper understanding. We need to identify in the technicalities to build up that knowledge. We need to identify who our best fit consulting partner would be. So many people will come to us and then have come to us and say, oh, we can provide you this service. And like many other presenters have said earlier, the pricing is different. And actually what they will actually tell you, the scope of their jobs and what they are going to be giving you as a service differs from one vendor to the other, one consultant to the other. And the way we partner with them, how compatible is this partner that you want to engage with you as a business? How compatible is this partner with your business, with the kind of people that you have in your organization? All those are very important, are things that challenge you while deciding what technical partner should you partner with in the course of adopting IFRS 17, And then the readiness of data. A lot of us, we still have software challenges in the Nigerian insurance industry. Organizations each day are looking for the better software. Some organizations right now are even planning to change their software. Have they stopped again to think about, is this software going to take them into IFRS 17? or in getting the partner and IFRS 17 solution, are we going to, is this new system that I'm trying to adopt or the existing system, is it compatible with the solution that's going to be deployed for IFRS 17? Some speakers have already spoken about it at the beginning, much more before I did. And then key considerations in selecting your software solutions. Definitely IFRS 17 cannot happen without a software solution. A lot of data is going to be analyzed, the inputs data, the way things, the way the data is going to be, utilized is entirely going to be different. And so it is important that we pick the proper solutions that are going to take us eventually to the promised land and then help us to keep sustaining our IFRS 17 adoption. So in overcoming the challenges that I have listed so far, it's important that while operators are adopting IFRS 17, that we ensure that we embody, that IFRS 17 is embodied into our strategy documents. We go back to our strategy, because if IFRS 17 is not there at the beginning of strategy, then the finance function will only but struggle all through the process and then just find themselves in it again, struggling without carrying along everybody. It's important to have a very robust project management setup team. The project management setup team has to involve all stakeholders within your organization. It has to involve every stakeholder. You ensure that you collaborate well with the regulator. Currently in the insurance industry, we have the IFRS 17 insurance working group, which is comprised of all these various stakeholders. We have National Insurance Commission driving that process, driving that working committee. We have also the external auditors, the Big Fours represented. We have the consulting partner, who is also part of that project team for the industry as a whole. We have representatives from various insurance companies, from the life business angle, and then we have from also the non-life business angle. We have a lot of finance function CFOs who are also part of that committee. And then we...
Okay, I'm sorry, Unju, do you want to quickly close up on that thought, because we are running out of time?
Okay, so we also need to keep training and sensitizing one another, carry along, same thing that everyone has said, collaborating with every stakeholder to ensure that we were able to conclude properly with IFRS 17. Other considerations are the budgets. IFRS 17 has to be embodied into our budgets. And then we've talked about selecting the right software, and then identifying the new software startup issues, and identifying our internal capabilities on technology to be able to ensure that at the end of the day, IFRS 17 is properly implemented in our organizations. Thank you very much.
Okay, thank you so much, Unjum, for your time. Quite engaging. Thank you for those thoughts you shared, looking at an operator's point of view. We'll be going into question and answer, but I'd like us to have a balance of thoughts, a balance of this conversation. And I want to quickly bring Oscar on board. Oscar is also going to run his presentation. I am weary of time, so I just want Oscar to also run his presentation, looking at the regulatory point of view, and then we'll be able to then have a proper question and answer session together, the operator and the regulator. I'll take the citation of Oscar Kitasoboka. Oscar is actually a regulator in the United Arab Emirates. Oscar, in his role as the chief actuary of Central Bank of UAE, manages and sits over a couple of projects. Oscar is highly skilled. He's a highly skilled actuary with over 20 years of experience working in senior management role and board member towards successful implementation of strategies. All right, ladies and gentlemen, please welcome Oscar Kitasoboka for his technical paper presentation. And then afterwards, we'll have the 5 panelists and who talked from the operator's point of view, and Oscar who talked from the regulator's point of view. Oscar, over to you.
Hello, good afternoon. Can you see my presentation on your screen?
Yes, we can.
Okay, thanks. Well, good afternoon, everybody. I think I've got about 20 to 25 minutes thereabouts. I'll try and run through this as quickly as I possibly can. I only logged into the conference over the past hour and a half or so. So apologies if there is some repetition, but I think I've picked up some points which I might just have to slide over. So bear with me as we go through this. My remit is to just provide a bit of a regulator's perspective. The information in here will be not just useful to regulators per se, but hopefully some of the people working in the industry. It is given from the perspective of what we're currently doing at the Central Bank of the UAE, but also from what I've seen in other fora or other discussions with people across the globe. So I'd like to just talk about our regulatory approach, how we are managing that change process, and then a bit of project organization, and then I'll finish off with articulating some of the challenges that we're seeing, but also how we're dealing with some of the technical issues. But in a nutshell, if there is one slide you can take away with you, I'll start with my key messaging. I guess in terms of when should one start, pretty much by yesterday. I guess we started about 2 years ago. There isn't that much time left. And I believe that the biggest project risk, if you want to know what it is, look no further than the 2023 auditing process. I believe that's going to be the biggest project risk. The third point to emphasize is that IFRS 17 actually does not change insurance profits. It only changes the timing of the profit emergence. This is a key principle to keep in mind as you go through executing your programs. The reason why that is because if you think about the balance sheet, the major introductions there, if you just kind of cut across all the other detail, the major introductions to the balance sheet are the contractual service margin, and the risk adjustments within the technical provisions. Now, these can be looked at as essentially indications of future expected profitability in the business. So essentially, by converting those into a liability, you reduce the shareholders' equity. But you know that those are going to be released over time. So therefore, the reduction in shareholder equity on day one should equal the future profit releases you should expect from that business. And therefore, there's a net zero impact overall. That's a very key principle just to keep in mind. Operational impacts are expected to have a far-reaching consequence. So what this means for your projects is that you've got to decide whether your project is going to be a huge investment. Like I think it was one of the speakers mentioned earlier on, or is it just going to be patchwork or a workaround? And then you just live with the consequences of that, whether that means cost or whether that means that you have a very inefficient process. That's the choice you've got to make. But fundamentally, I think what IFRS 17 is about, it's about pricing adequacy. That's the really, really fundamental thing to keep in your mind, I think. If you're writing good business, then you've got nothing to worry about, because all IFRS 17 is doing is communicating the underlying quality of your business. You may need a backup plan just in case if you're starting this late. Quite what that backup plan looks like, I really don't know, but it's a discussion to have with your auditors, which is why I kicked off by saying that I believe the auditing process is going to be the biggest project risk. Try not to reinvent the wheel. As of today, we'll probably have 3 years worth of information that is floating around publicly or amongst various consultants, etc. It's important that you leverage all of that and save yourself a lot of time trying to study the detail. That will come with time, but there are things that you can do as low-hanging fruit or quick wins. In terms of actions for executives, the focus really has to be on organizational capability building. You've got to remember you've got a business to run and financial reporting processes to run through. So it's important that you have the right capability and the knowledge. And then finally, for knowledge management, I think this is probably the one area that's not being focused on very much at the moment because everybody's looking at the detail. But in the end, when all the consultants have gone, you're left on your own. And you've got to run through the numbers with the board, with the audit, with the regulators. It's important that you have the right knowledge and talent management strategy in place. So in a nutshell, that's what I'm going to be saying. The rest of it is detail. Our regulatory approach can be summarized as set out in this pyramid. We started in 2018 with a gap analysis that led to 2020, where we carried out our first financial impact assessment. That assessment was done on a best efforts basis, recognizing that the standard was not yet fully complete at the time, and the newness of the of all the information. But what that indicated is that the operational issues will dominate going forward. It also identified certain technical challenges as well as the audit risk that I mentioned earlier on. In addition to that, we've had companies reporting to us on a quarterly basis about their project updates. This year, 2021, we've done a second financial impact assessment that was submitted in March. That was carried out on a more realistic basis. We introduced various aspects which were important to us as regulators, particularly for the UAE context. We don't have a local gap for financial reporting, so we're fully reliant on IFRS, so we have to be fully aligned with IFRS 17. There are some points of detail, for example, relating to the vast amount of optionality under IFRS 17 and some challenges that can create from a regulatory standpoint. I'll come on to those points later on. But essentially, some of the points we're looking at, which are related to that optionality, could potentially impact the solvency in the industry. If you think about the risk adjustment as an example, whilst that is positioned as a liability component under IFRS 17, because it's a margin over and above best estimate, because you can think about it as a margin, it's potentially loss absorbing capital. So from a regulatory standpoint, do we admit that as a liability component, which therefore affects available own funds to support solvency, or do we allow some benefit for the risk absorbency? These are some of the strategic issues that we need to think through from a regulatory standpoint. And then, of course, operational readiness, the target operating model, that has featured very, very heavily in our 2021 financial impact assessment. We asked something like 130 questions of management on various areas, various policy choices, and we're busy kind of sifting through that. That will then form a basis around which we can supervise the companies. And then in 2022, the plan is that we'll do another financial impact assessment. So that will be number 3, where we shall be very, very interested in understanding the outcome from the various policy choices that are being made. Hamad
Sorry, the speaker is muted. Do you want to unmute? We can't hear you.
Sorry, can you hear me now?
Yes, please. Thank you.
Sorry, I must have been inadvertently muted automatically there. At what point did you lose me?
Oscar, you took my name and then hey, you just went silent.
Oh, Hamad, you're still on. It's great to hear from you. Okay, so what I was saying was that Hamad earlier on mentioned that there were various policies that are being crafted by different companies. And it is those policies that will contain policy choices. And it is those policy choices that will come through in the numbers. So we're very keen to see what that will look like in the third financial impact assessment in 2022. But then, of course, we shall be hopefully at the optimization stage to determine market readiness. So that's our regulatory approach in a nutshell. In terms of how we're managing through the change process, because this is ultimately a change management process, we have three key features that are guiding us. The first feature is the IFRS 17 roadmap. So this is where we have articulated to the industry, and they know what's coming. They know what we're planning to do. They know when the financial impact assessments are planned for. They know what the basis is going to be. They know that our strategic intent is to align our regulatory reporting with the financial reporting. Because like I mentioned earlier on, we don't have a local UAE gap, so this makes sense for us. And they know that we're very, very interested in the target operational efficiencies and leveraging the auditing process, because if we have the same reporting basis for financial and regulatory or statutory, then what that means for us as a regulator is that we can leverage the corporate auditing process. It also means, of course, from a company standpoint, that they don't have to have duplicate systems, which then cause some issues with reconciliation. In addition to that, we have an IFRS 17 industry working group. Essentially, it's there to try and look at technical interpretation of the various optionality. It ensures that we, as a regulator, will move in step with the industry. But it also provides a forum where we can break out and do some detailed investigations through various subgroups. And I'll show you some of the outcomes of that shortly. The outcome of this industry working group is essentially to try and feed into the policy or regulatory policy making process. The contributors to these working groups are actuaries, accountants, various consultants, be it IT, and then of course ourselves as a regulator, because we chair this working group, and then of course the industry body, which helps us to coordinate various challenges that we might not necessarily pick up in our day-to-day work. And then finally, at the apex of this pyramid is a very, very keen focus on key aspects of the journey. We've got to maintain the momentum. We've already called out the auditing as the biggest project risk, so we're trying to see how best we can work with the auditors. There are critical components which I'll then move on at this stage, just to give you a sense of what it is I mean by focusing on the journey.
Sorry to butt in, Oscar. We can't see your slide again. Do you want to try to share again?
Sure.
Whilst Oscar is putting up his
Can you see
slide
that?
again, please, if you have questions, start getting your questions ready. After Oscar's presentation, you'll be able to ask your question. Yes, your slide is up now. Thank you, Oscar. Over to you.
Great. Okay. So in order to put a slightly different spin on how we're managing change, because in order to go through a change management process, I think it's important to have enough of the detail so that you're really super focused on the things that you really need to tackle. So these are the things that we believe need to be tackled. And this is a structure that can be used by people if they want to try and organize their projects. So The themes in yellow, the financial impact assessments, the optimization, and the stakeholder education, those are overarching themes. And then the red blocks are the next level of detail down. So if you're going to do a financial impact assessment, it's important that you select the hazard date for that impact assessment, and try not to select the hazard date that's within the live operating environment. So for example, don't try and do a financial impact assessment using year-end 2021 numbers, because companies are just going to be busy with their own live year-end 2021 reporting. So our first financial impact assessment was done off of the closed position of 2018. The recent one was done off of the closed position of 2019. So in 2022, we're going to be doing a financial impact assessment driving off the 2020 year-end closed position. I mentioned the solvency impact assessment where that is relevant. Business plans and rate adequacy monitoring is going to be very, very critical. The previous speaker made a very, very important point. She mentioned that essentially, when you think about financial reporting, because it's on an earned basis for insurance, essentially what the business you underwrite in 2022 is going to define 50% of your profitability that you will report in 2023. So actually, you can think about IFRS 17 as starting in 2022, insofar as that will actually formulate 50% of your profitability that you report. So understanding your rating adequacy and business plan is absolutely critical. And then from an optimization standpoint, the policy choices, which I won't go over that ground again. The target operating model, I think the speaker 2 slides back talked about how is this all fitting together in terms of the systems, the processes, the handoffs between actuarial and accounting, and then key performance indicators. Stakeholder education and knowledge management, really what you're talking about there is the items in blue. You have various stakeholders that you have to manage and play to. And it could be all the way down from the kind of mid-management to the board and external investors, analysts, etc. So it's quite a wide remit, but hopefully this will be a helpful articulation for you. The last 2 slides are really just giving you a sense of, given all of the above that I've talked about, which is really just framework stuff, what has been the outcome so far. So what you're seeing on slide 7 is just examples of some of the outcomes of some of the discussions we've had. So when you're reading this slide and you see red text, that means that we're likely to have some regulatory guidance around that. Amber is where we're saying we're possibly, we could consider some regulatory guidance, but probably not. And then the black text is just things that we have discussed just to try and harmonize the thinking in the industry. I'm just going to focus on the issues in red. So when it comes to the risk, so the 4 headings there are the subgroups that we've had in our industry working group. So we've had risk adjustment, financial reporting, aggregation, and reinsurance. We're currently doing one on takaful insurance because we have some takaful business specific to our market. So for risk adjustment, we have a challenge around consistency in the different methods for calculating the risk adjustments, which can lead to very varying outcomes. So from a regulatory standpoint, if we're aligning with IFRS 17, we may not necessarily want to deal with that range of variability. Secondly, I mentioned earlier on, how does the risk adjustment impact liabilities, and what is the second order impact on net assets and therefore on funds, which therefore support solvency? Should we give credit for that? That is something that we may have some regulatory guidance on. For financial reporting, takaful issues, that's still under review under a wider package of research. The format of the financials is something that we're looking at. We've already made the strategic decision to align our regulatory reporting with IFRS 17. Those really are the main areas so far that we're thinking about having some regulatory guidance. The rest of the points here are things that you will ultimately come across as you go through your various work. But like I said earlier on, try not to reinvent the wheel. You can use this as the kind of key leading questions for your various consultants or auditors, just to kind of make sure that you're discussing the meatier subject matters. So what is the impact of all of this? What have we seen so far? The graphic you're seeing on your screen is showing you what we have seen. So this is coming out of the financial impact assessment, which was done, as I said earlier on the 2018 year-end finance close position. So the graphic is looking at a change in net liabilities. So what we saw is that if you start on the IFRS 4 position, what you might tend to see is that the reduction in the net liabilities because of discounting will probably be reversed out by the increase due to the risk adjustment. And then there was a lot of uncertainty, like I mentioned earlier on. That calculation was done on a best efforts basis, and that is very indicative of the fact that we have this methodology and reinsurance effect here, which shows that net liabilities would increase by 3%. We're yet to see what this number looks like for the 2019 position. But this just kind of gives you a sense of why we're saying that operational aspects are likely to dominate. So the long and short of this is that we're seeing that the net liabilities are likely to increase by something like 4%. So therefore, equity is likely to reduce by about 4% of IFRS 4 liabilities, which is not very significant. But again, just to stress, this is 2018 position, and it was done on a best efforts basis. So if you see numbers and a shape that looks like this, don't let that concern you too much. But in terms of the intuitive feel and sense checking you should have in your minds, what are the things that could lead to a reduction in your opening equity position? Reductions are likely to come from the fact that you now have a contractual service margin. Perhaps you have a loss component, of course, the risk adjustment, and then there are some points of detail around having a wider contract boundary and maybe mismatches between reinsurance and the gross, which are being introduced. What could lead to an increase in equity? Of course, if you're discounting liabilities, then equity will increase. If you're using a much higher discount rate, maybe for your life insurance business than you were using in IFRS 4, then again, equity, you get an equity benefit there. And of course, mismatches, like I mentioned earlier on. Another point to keep in mind is that if you currently carry margins in your reserves and you're going to strip out those margins and replace them with a risk adjustment which is lower than the margins you're currently running with, then of course that will also benefit your equity position. So this is just high level areas to help you sense check whatever numbers you see coming from your various advisors. So finally, in terms of the challenges, I'll skip through most of the stuff here, but various surveys have been done, and this is trying to give through kind of key messages from what we've seen, as well as from those surveys. The underlying business model of insurance remains. It's cross-subsidization. All that's really happening is that the fact that you have to show your onerous contract is simply saying, just show us what your loss leaders are. I'm trying to crudify this, but you get the point. Investor relations strategy is something you need to start thinking about now. The fact that there's a moderate impact on key performance indicators. KPIs is something that will evolve over time. So don't waste too much of your time trying to get this completely right. Try and get yourself in a place where you feel you are, I don't know how I put this across, but approximately right rather than precisely wrong, because you're never going to get everything right the first time around. Operational impacts we've spoken about, IT infrastructure we've spoken about, talent and retention we've spoken about. There are some asset liability management issues when you look at the interplay between IFRS 9 and IFRS 17, which you need to think through just to avoid any mismatches there. I won't spend too much time on that. Your reinsurance strategy might need to change starting next year, because certain reinsurance clauses might mean that you introduce mismatches. So that is something to speak to with your brokers. I know that globally speaking, the reinsurance brokers have been looking at IFRS 17. So make sure that as you go through your reinsurance renewal process, you ask these sort of questions, which are IFRS related, IFRS 17 related of your brokers. And finally, we've spoken about everything else, so I won't really spend too much time on that. So I'm hoping I've made up some of your time. I was meant to be finishing at 20 past. I'm 3 minutes over, but hopefully that's okay.
Thank you so much, Oscar, for your presentation. That was quite insightful. Thank you. So we'll go into the question and answer session. Do you have any questions for Oscar and the 5 panelists? All right, you may just want to indicate by show of hand or by typing in the chat box. All right, the 5 panelists are here. So Sato, you may turn on your camera. Rashida, your camera. Unjum, your camera. Inlade, your camera. All right, and it's also okay to have the panelists also ask question, from one another. I'm sure Oscar is here from a regulatory standpoint. Some of us as operators, even as speakers, we may have some questions, all right? Or we may just want to bounce ideas, all right, to see how to overcome some of these challenges. So your questions, please. Or general comment about the Oscar's regulatory point of view. Okay, doesn't look like there is any question in the chat box. Okay, Risk, do you have any contribution or any question you want to add, or anything you just want to add to this?
No, thank you. I think for me, rather than just Rashida mentioned, if you have not started, you need to start now. There might be people knowing the context of our environment and the culture and the timing to rush everything. One of my biggest worries is the fact that we know this is coming. We procrastinate. Some will not say it's not necessary, it's not important. And then we have the last minute date. And this last minute date puts enormous cost on the balance sheet. What can we do to avoid this recurring problem? We pay heavily. The regulator will breathe fire on you if you don't comply. And some will go to the extent of looking for extra money. And then if all your costs is rounded up, we'll talk about cost a lot today. For me, the question is, how, as practitioner, we know it's coming. What are the practical things should we be doing now to avoid this last minute problem? Because we do this last minute every time. And they're going to tell us, deadline is saying you must comply. That's my biggest concern, because we can do all the talk, We can do all the things. We've talked about having a project plan, change plan, but in our context, the context we're looking at within our context, we don't prepare, we don't plan. There are very few organizations ahead of just even trying to plan alongside. People are still looking at it, leaving it last minute. So I don't know who's going to take that question for us to see what are the practical steps to overcome this. Okay, Lekon, thank you.
All right, Ogaris, I think you are right. Sometimes we push things to the last minute, but I think part of what we need to do is what we are doing today. We need to speak more. We need to do more sensitization. Trust me, there are companies that are doing something at their level, but we need to engage as an industry. We need to collaborate. We need to speak to one another as practitioners. We have the benefit of those who have probably done this. We've seen it from UAE. But at NIA level, at individual level, we need to speak to one another, learn from one another. There's nothing hidden in this project. It is not Old Mutual project. It is not AXA Mansard project. But it is a collective project to which we can learn from one another. Everyone is learning, and we can only get this done by speaking more, having this kind of conversation across industry. And remember, I think Uju mentioned something which is very critical. We can sit here as insurance people and we have been talking, but guess what? In Nigeria, the brokers are very powerful. They determine our price. They determine a lot of things. Who is speaking to the broker? Are they even aware of the impact of IFRS 17? These are conversations that we should begin to have quickly. Time is against us, and the more we speak, the more we engage, the better for us.
Fantastic. Thank you very much. Jim, I suppose you want to weigh in from the NIA point since you wear multiple hats there. How can we get people to just this culture of we'll get it done? I have seen it frustrate me, the essence of procrastination from even senior exec, those who believe, and the sense of, okay, we'll get there. But the problem is that it weighs on our balance sheet, it weighs on our P&L, all the compliance issues we've been talking about. So from the broker side, Lekon, I can guarantee you we're on that conversation with NCRIB, and we're going to get them to speed to that. That's what we're doing as Cora Clark here, definitely. And you guys are going to see how that's bringing their knowledge to the table, both the reinsurance broker and direct insurance brokers as well. So, Jumi, you're going to say something?
Yes. On the industry side, we will begin to drive more as operators. We'll drive ourselves more as operators. What we will have to do, which I'll have to push that going forward, is to collaborate from within. Yes, the regulator has already sent us, has shared a roadmap for the entire industry at the moment. The regulator has asked each organization to give a quarterly feedback on their IFRS 17 journey. I think the regulator is doing what they can do, but we operators should, on our own side, begin to drive ourselves personally and stop that procrastination. We are used to procrastinating and then getting the answers. Somehow jumping into the answers, maybe we pay the price to our auditors or the consultants, just give me this thing, implement it now for me, implement it now. But that doesn't help us so much, because even at implementation, we need to struggle, and then we struggle and struggle. So we'll drive an awareness, we'll drive a campaign. We actually have a lot of subcommittees under the Nigeria Insurance Association. We have the life offices, we have the risk and compliance offices, we have the legal offices. We have a lot of offices under the Nigeria Insurance Association. So what we will take from this session is to discuss with the NIA Secretariat that IFRS 17 should form part of the agenda of each of these committees on a monthly basis, because these committees meet on a monthly basis. We'll also need to even maybe recommend to the regulator that the regulator can also somehow interact with those committees from time to time, and maybe have quarterly meetings, awareness campaigns with all the committees from time to time as an industry, so that everybody sees themselves as part and parcel of IFRS 17 adoption. They don't have to keep procrastinating and do it as usual, and then find out that at the point of execution, they are struggling with validating those numbers and what has been done. The auditors come and then they're telling the auditors, oh, it was my consultant that did it, and maybe the consultant is no longer anywhere found. So we need to tell ourselves some hard truth now and begin to push one another to get to that promised land. Again, as organizations, I have talked about establishing a project team and a strategy team for this. The regular people who do the routine jobs in the offices are not the ones going to do these IFRS, are not going to be the ones driving IFRS 17 implementation. Every organization has to set up a dedicated project team. And that project team has to be out of the routines of every day, because people saddled with everyday responsibility definitely will not be able to drive IFRS 17 execution to total accomplishment. So if it means to hire on contract someone for 2 years, or some team on a contractual basis for 2 years to drive every other person who is going to have an input into that process, that is the only way we can really get everyone who is supposed to be a partaker of this to actually get it to success at the end of the day. But if nobody is personally saddled with that task as a project manager who is dedicated, whose KPIs are IFRS 17 and is purely dedicated to IFRS 17, and no other major KPIs, then I guess it's going to be business as usual. So setting up a project team, a dedicated project team, having a project manager to drive IFRS 17 is key to ensuring success for every insurance organization. Thank you very much.
Fantastic. Thank you very much. I'll skip Pam. You're going to say something actually.
Yes, I was, but I think Njum has covered most of what I was going to say. I was going to say that a lot of it would be driven from the top and from the regulators. So she mentioned how we need to lobby the regulators to start sort of putting monthly targets in there. I think that's very important. I thought it was really good what Oscar was saying about the financial impact analyses that they're requiring from their people, because that's going to help. Because I think some of the problem right now is we've got consultants, we're aiming for 1st of January 2023, but no one's thinking about, you have to understand what's going on. Like, understanding is going to take a lot of time. So even if you get a consultant, or even if, to set up your project, or set up a model, or set up what you need to do, it's going to take you some time to understand the results. Numbers will come out and you'll be looking at it like, and you just, it's going to take some time to be able to do that. So it is important to start, whether it's dry run, whether it's impact assessment, whether it's even in your small area, your little sensitivity analysis model, try and just see what's coming out, just to try and start having benchmarks for you to refer to. I think that's very, very important. That will help. And also we should remember, it's not going to end on 1st of January 2023 or 31st of January 2023 when you're doing your audit. It's going to take, even a few years after that, we will still be trying to wrap our heads around IFRS 17. I mean, we even saw it like Solvency II. It took a while for people to really, really understand what was going on. So I think it's important to try and just start at small pieces and see where you get.
Thank you. And it's interesting to talk about Solvency II. Can I say there are a lot of people still doing capital management, looking at their solvency requirement. I'm still surprised that some senior execs still don't understand it till today. They're doing the numbers, they're looking at it, but they couldn't interrogate it. So really, the place of breaking down this jargon and the simplicity and to help people to be able to walk through it. And that's our passion. Tato, I was going to ask the question, it's interesting you put your hands up because you guys have moved forward a bit at Continental Re. Tell us, practically with colleagues there, the things you have done. And I'm aware of the progress you guys have made. So just in a nutshell, what are this idea of just waiting? How you guys have overcome that?
Like I said, you should avoid this wait and see approach, because that's what a lot of us have been doing in the industry. We just waited to see what other companies will do. And I think the best thing is really to start with a gap analysis. That gives you direction. That gives you a whole list of tasks you need to do. And from there, you can actually prioritize which tasks need to come first. So I think a gap analysis really gives you the right direction and the basis for planning the project.
Thank you very much. Oscar.
Yeah, so I just wanted to address this issue of this thing is not going to stop on 1 Jan 2023 and the comparison to Solvency II. I think the really major difference here is that, and partly why, Joachim, you may be seeing certain executives to this day still don't really understand Solvency II. The reason there is because Solvency II is somewhat removed from their day-to-day interests. The European space, Solvency II is their kind of regulatory reporting, regulatory capital stuff. So that's really the remit of maybe the CFO and the CROs to some extent, because the risk team usually tends to carry out the validations, etc. But if you're an underwriter, for example, or if you're a finance manager, you don't really care too much about Solvency II. That's for whoever needs to care about solvency. Yeah. So that's really the reason why. If you compare that against IFRS 17, everybody will need to care about this, because if you're an underwriter, this is about the pricing. The CFO is going to come up and say, listen, I'm reporting that this particular portfolio is onerous immediately. It's causing me a loss. What are you doing about it? If you're a claims manager, you will be getting pressure from the CFO. Those of you who are chief actuaries will attest to this. When you set reserves, the number one pressure you're going to get is from your CFO and your CEO. They want to present lower reserves. Maybe you need to talk to your claims people. So you can see already how it's permeating throughout the whole organization. But more to the point, when you're putting together your business plans, which is really the summary of how you're going to be running your organization, everything in the company comes into play. Every little thing, even the cost of IT, is going to be one of the expense inputs into determining whether a particular portfolio is onerous or is not onerous. All the way down to your shareholders. There is an extent to which whatever you do, for example, there are methodologies that you might take on the risk adjustment calculations, which try and utilize the capital that you're holding in the company. How is that consistent with the target returns on equity? So that's the fundamental difference here. And honestly, my view, off the record, to the extent that this would be off the record, would be that if one is going to wait until the end of this year, then they're in big trouble. I don't see how you do this. If you haven't started even this year, for me, by 1st of June, which is a week away or whatever, if you haven't started, I genuinely don't see how you get this done by the end of 2022, simply because of the details. So I think the narrative has got to switch to, okay, what does the answer look like? And who has the answer? And maybe the auditors have a bit of the answer, or at least to some extent, they have the marking, what do you call it? Marking framework, marking sheet. They know what the reconciliations should look like. They've been doing a lot of work on pro forma financial statements. So have a look at the marking sheet, and then try and figure out how you drop the numbers into that marking sheet. If you come to an auditing process, you don't want to fail on process. You want to fail on the numbers. That's kind of how I'd put it. But even then, I'm scraping at the bottom of the barrels here. But you can see where this narrative could go.
Amazing. Rashidat.
Oh, I mean, I think Oscar has really, really sort of crowned it all up from the regulatory side and the reality that we're seeing in the market. I think everyone has alluded to the fact that we need to be prepared. It's started yesterday, as he said. It's essential to truly understand what this means. When we're going to adopt IFRS, some people waited for others to do it and just took the financial statement and copied it.
Yeah.
Sometimes even copying some of the names of the companies in there mistakenly,
Yes.
I must say.
It's terrible.
You cannot do this time around. This is not a copy-paste sort of situation. And the moment we're able to sort of wake up our organizations, challenge them, challenge ourselves for everyone on the call and for everyone that we engage with to pay more attention, to ask the right questions and to engage, then success, is not just one, final stop. Like was said today, it's going to be continuous because this is our businesses. Our businesses are infinite in itself. It doesn't just end 1 year. It keeps going on. So how do we ensure we take the right decision to keep going on, to keep evolving, and to help our organizations achieve the goal that they are pursuing? And if we don't do this well, then it just takes away from our abilities. They will definitely do and ensure that we take these decisions, ask the questions, and where some of the solutions are expensive, can we work together as an industry and engage some of the professionals, engage on some of the solutions together, so it's more cost effective for us and not just sit inside our own silos as well. I think that's something else that I feel, Joachim, that could really make a big difference. Thank you.
Thank you very much. I think Rashida, on that note, I was going to say that one of our passions is to make sure that you succeed. We're not bureaucratic, we're very lean, we're very fast. We want to get you to the finish line. We are concerned about insurance company nosediving, the ones that you see the brand, everything looking good, and they have brand colors, cars, and everything. I heard a story a few days ago, and it broke my heart. One of the insurance companies I dearly look up to, as a young man, to just learn that it's no longer to be in existence. So, roadmap, plan, support, the industry engagement with Ijum. Myself and Oscar, I think we've engaged with NIA before, if Ijum can remember. So we can make this thing less of a talk and we can make it a doing for those who are willing to. Because if we're not careful, we pay the money, we can copy the thing, but at the end of the day, that insurance company will go down. And that is the threat we want to prevent. We can do all the temporary solution, but it will not sustain over the long time. So understanding the future uncertainty, especially the threats that can affect your balance sheet, your bottom line, your capital, that can ruin you is key. But also the excitement about the opportunities of growing something extraordinary, doing something phenomenal, is also equally exciting. And taking advantage of those upsides while we're keeping an eye on the downside now is critical. So on that note, I'm going to say thank you all for this amazing session. It's been quite inspirational. I want to thank all the speakers. I want to start with our chairman, Lawrence, and we have the chairman of NIA. I thought she'd be able to pop in. I'm sure she called. She had an urgent message. She'll have been here. Or the DG, sorry, she'll have been here as well. So thank Continental Re and the DG of NIA for the support. All the guest speakers. I want to start with Hamad Khan. Thank you so much for that practical insight. You've given us a lot of nuggets, a lot of practical tools. You said we should not worry too much, enjoy it, the difficulty, enjoy the confusion, and stay there. Thank you, Mark. Thank you so much for also telling us about the fact that there are technology that can help to make this easier. Leko Inlade, thank you so much for your insight as the CEO. I'm sure you're keeping an eye on the numbers, but also you are aware of the risk. Yvonne, thank you so much from a risk lens. Tato, thank you. Jum, Rashidat, and finally, Oscar, thank you so much for the amazing session. I think this is the beginning. We're going to take the conversation to the brokers. We're talking to them. Not something technical. We want to be the midwife to the industry. We want to midwife you all. We want to give birth, to give birth to successful children. We don't want stillbirth. We don't want this thing to die. So Conrad Clark is here to make sure your delivery process is safe. It might be a bit painful, as most of us might be aware, but we'll make sure we'll give you a epidural if you need it as a risk mitigation. We'll make sure that we help you while you're pushing. Whatever it takes, the baby will come out and the baby will not die. So on that note, thank you all for joining us. We're going to stay around for interaction, networking. Please feel free to ask questions, to mingle for the next. We have 30 minutes. We don't want to keep you long, more than 2, and just enjoy it. Thank you all. God bless. We're definitely going to take this conversation forward. We're definitely here to help you with your roadmap. We're going to engage the brokers, and we definitely want to make sure that with the regulators and everybody, we push through the line successfully. Thank you all. God bless, and thank you for your support.
Thanks. Appreciate the time.
Thank you.
Welcome. Take care, everyone.
Thank you, everyone. Thank you.
Please kindly kindly give us the feedback form. As Femi said, we have some free Conrad Clark special top-notch training for which will be given to a few people. So randomly pick. Please give us the feedback so that we can plan. Thank you all very much.
Thank you. Thank you, Conrad Clark. Thank you, everybody. Bye-bye.
Thanks, everybody. Take care. Nice to meet you all. Take care.